Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure. Hey everyone, welcome everyone. Thanks for joining. Good afternoon, guys. It's live FOMC in a couple hours. We're gonna take our time. We're gonna go through the charts. We're gonna do an analysis on gold, Nasdaq, and US 30, and get ourselves ready for the big FOMC. We're gonna get started in a couple minutes. Just guys, I ask everyone, just please manage your risk. Okay, this is not the gambling day that you wanna go crazy on, but there will be some accounts blowing up, but that's the way it is on these high impact news days. So just control your risk, guys. Thank you. We'll get started in a couple minutes.
Hey guys, good morning. Welcome to the live session of Stocks Network Trading. My name is Dave, guys. My partner is Ron. Let's get down to business here, guys.
In on US 30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.
Recording in progress.
Hey everyone, welcome to Stock Sniper Trading. Thanks everyone for joining. My name is Ron. My partner is Dave, and it is almost noon on a snowy day over here where we are. It's very cold and we got pounded with snow, a couple feet of snow out there. So you don't want to live where we live in Canada here if you don't like snow, because you can't even get out of your driveway, barely make it anywhere. So we're going to stay cozy inside here, and we're going to do some analysis on the markets. We're going to do gold, we're going to do Nasdaq, and we're going to do Dow Jones. We're going to take our time. We're going to also read what is FOMC, because we know that we get a lot of new traders that have no idea what's going on. FOMC is a big event. It's only scheduled 8 times per year, and this is the last one of this year. So it's a pretty big one. And 93% now of all analysts are predicting and forecasting that there's going to be a cut of 25 basis points. So what we got to do is maybe, did the market already bake this in? Because it's kind of been like we've been talking about this for the last month that they're going to cut. So we'll see how the markets react when they announce it. And it's not 100%. And again, I said 93%. And this is just from analysts. This is not from Powell's mouth. So we'll see what they do. So we have to brace for impact, because if it's not a 0.25% decrease and it's a pause or a hike, then we could see some craziness in the markets. And if you're not managing your risk, or if you're in a trade prior to going into that announcement, you got to know that it's going to be very volatile. So whether you're going to be in a trade, and also we've been doing swing trading this week. We started Monday, Tuesday, and then we have another later session tonight for our third swing trading. It can impact if you're in swing trades as well, because the moves can be so dramatic. You have to be ready for it, okay? But the best practice, in my opinion, is, if you can, be patient, be disciplined, let them release the news. After FOMC, maybe after 2:30, Powell will be coming to the conference. Then once the market settles down, the news is released, maybe come back and start analyzing in the Tokyo session, and start your trading, maybe going into Europe and maybe New York. Tomorrow's Thursday, and finally finishing off the week on Friday. And maybe you might see that it's not as volatile. There's better volume to trade, better moves. You might recognize a pattern and things like that. So that's my advice for everyone, but I understand it's exciting. FOMC is fun time, same with like NFP. So we'll see. We'll be trading it as well. If there's a setup, we'll take it. But I'm personally managing my own risk. So I hope you guys are too. And just a disclaimer, SST, Dave and Ron are not financial advisors. We do trade the markets on a daily basis. Everything you do is on your own risk. Let's all be mature adults about this. And we're here for education and entertainment and to have a good time with you guys, okay? So I hope everyone's having a great day. And let's see how these markets are moving, okay? So thanks everyone for joining. I appreciate you guys. It's going to be a 3-hour session and we're going to go till 3 p.m. And then after that, guys, I got to get out of here. I got to go grab my daughter, okay, from school. And I got to, hopefully I can get there in all of the snow. I might have to put my snowshoes on and walk out there. So how's everyone doing? Welcome, guys. Okay, so we're gonna get started with news first. We'll get into the charts. I promise you, we're gonna get there. But let's just go over some news that already has happened today. Okay, so over here, Forex Factory. There was some U.S. employment news coming out. Employment cost index quarter over quarter came out at 8:30. Dave and the snipers were trading this session over here. We had some Canadian news. So over here already in Canada, we've had our Bank of Canada rate statement, our overnight rate. In Canada, they paused it. Okay, so no increase and decrease here where I am in Canada. So it was a pause due to the labor market is pretty good over here in Canada. So that was their why they paused the interest rates over here. They were saying it's due to a stable labor market over here. Okay, and so that's in Canada. And now crude oil inventories. Okay, so you can see that negative 1.8 million barrels over here. These are weekly inventories. So we did a little analysis last night on swing trading with we incorporated oil with our gold charts, and it's at some pretty lows, and it even dropped even further down today. So it could come down to $55 a barrel, and that might be a good time to maybe look for a swing buy because it hasn't came back to that price level in about 4 or 5 years. So, but it could also go lower. That's the thing. That's it's coming down, but it could go down lower depending on how everything is going on around the world, and if there is a lot of demand for oil or there's more supply than demand. So that's how that security moves. Crude oil is better to swing trade or look for longer positions as opposed to scalping because it gets very choppy if you ever go down to the 1 minute, 5 minute time frames. It's not the best for scalping. I'm a scalper. I've scalped oil in the day, and I'm telling you, there's better securities to scalp than oil. Okay, and this is what we are awaiting. 2 p.m. in 2 hours, we're going to have the federal funds rate released in the United States. Okay, so the last FOMC was 4%. You can see the forecast is 3.75. So that is a 0.25% decrease in the forecast. We will see the actual number. It will be released at 2 p.m. and you will see some volatility. Maybe even the first 1 minute, you might see a dramatic candle the first 1 minute. It could be a big bullish candle, or it could be a big bearish candle. And it's called like a liquidating candle. What it does is just liquidate positions or tap all pending orders in that range. So it is going to get very volatile. So, and then it could be like go up very bullish, catch a wick and come right back down. And it could be a spin top candle. We have no idea, right? But the best advice in a situation like this is wait for your particular time frame, what you're trading, to close. And then you're not making an impulse decision. You're still making a decision, but at least you're basing it off of closing volume. Like, you guys have to understand that in trading. But we do take impulse trades. It's human nature. But if I do take an impulse, I manage my risk. I know how much. I know I'm taking an impulse trade, so I'm not going all in on that trade, right? I go more. If I get more convincing volume, I get closing volume, maybe I get a retest, then I feel just more comfortable taking that position as opposed to just jumping in at any time, anywhere, So that's what patience and discipline. When traders say this, mentors, coaches say, Successful traders always say patience and discipline. It's the same thing everybody says. They say it for a particular reason. It's not just to say it because it sounds nice. It actually means something. So you will understand when you start to get more patient and discipline in your trading, you're going to start to see that your trading should be improving. Okay. I'm not saying you're going to be a millionaire. I'm saying it's improving. Okay. And then there's other things. It's not just being patient and disciplined and you're going to become an amazing trader. There's a lot of other things that you have to incorporate. So to be a trader, you have to balance a lot of things and you have to think on the spot, especially as an intraday trader or a scalper. So I hope everyone's getting better at all of these things. Okay. And then after they release all this, we have the FOMC economic projections. Okay. There's only a few FOMCs per year that include the economic projections. This is a big one, and it's the last one of the year going into 2026. So this is a pretty impactful FOMC. Then we have the statement, and then 30 minutes later at 2:30, then we have what the markets are waiting for. They pretty much have baked in the 0.25% decrease. This shouldn't be a surprise for anybody, but the big event is here at 2:30. This is when Powell, the FOMC chair, steps to the podium, and this is where he talks. And this is where he explains the decision on whatever they came up with, the actual, if it is a 0.25% decrease, pause, or increase, he will say why they justified that. He'll talk a little bit about monetary policy. He'll talk about inflation. He'll talk about tariffs. He'll talk about the labor market. And every single time he's talking about these things can cause volatility in the market, okay? And this directly impacts the US dollar. So whatever security you're trading that is against or paired with the US dollar, it will be affected, okay? And then finally, near the end of the conference, if you've never seen it before, he takes questions from the audience there, or the reporters or the journalists. And normally he gives those cookie cutter answers. He never really gets into it. You know, it's just part of their agenda. They don't really get into it. He knows how to talk to the journalists. He knows how to give those boring answers. Guys, this could be, you know, the final time we see Powell, because Donald Trump is looking to replace him in 2026 with Hassett. So, you know, we've been following Papa Powell for a long time. He's seen as like a grandfather to us, but you know, this is how the markets work. Next guy up, and we'll see what their agenda is, okay? And these guys directly move the markets, okay? So we have to understand that this is a very important FOMC. It's the last one of the year, and just please manage your own risk management, okay? And later we'll be coming in the evening for our final swing trading session later tonight, okay? And so just right over here, the Fed decision is expected to feature a rate cut and a lot more. So here's what's to expect. If you click on this article, I'm not going to read the full thing, but it's right here. So the Fed Reserve is poised to deliver its third straight interest rate cut Wednesday while firing a warning shot about what's ahead. So this is what's ahead going into 2026. Following a period of remarkable indecision about which way central bank policymakers would lean, markets have settled on a 0.25 percentage point reduction. If that's the case, it will take the Fed's key interest rate down to a range of 3.5 to 3.75. However, there's complications. The rate setting FOMC is split between members who favor cuts as a way to head off further weakness in the labor market and those who think easing has gone far enough and threaten to aggravate inflation. So when you lower interest rates and you print money, that directly causes inflation to go higher. So, you know, like there is a lot of inflation going on right now. So you got to understand these guys cutting these rates are just going to create more inflation. That hurts you and I. So they got to be very careful with what they're doing, you know, so this is a big one. And the article is here if you want to read it. And it's good to get educated on articles and things like that. Earnings, there was some earnings today. However, the market is not really concerned about these pre-market earnings. After hours, there is a couple names. Oracle is a big name and Adobe is a big name over here, part of S&P 500 and NASDAQ. They will be reporting in the after hours just after 4 p.m. when the markets close. And then in our Discord, guys, we sent out a few signals. We're still using this same setup, this level as static levels for our indices, and looking for maybe some sells on gold right now. But signals, it's very hard to send out signals during FOMC due to how volatile it is. Okay, so that's why we're going to go in the charts together and we'll see what we're looking for. Okay, and there's a free Telegram channel pinned at the top of YouTube for everyone. Thank you everyone for joining. Almost 200 viewers. We appreciate you guys. Thanks to you guys that hit the likes already and subscribe to the channel. But for those who just joining us, if you guys can leave us a like and subscribe, we do appreciate it. It gives us motivation to continue to do this on a daily basis with you guys. Okay, and here's all of our links for our live sessions. They're available in this free Telegram, and updates with Dave on his New York calls with the snipers. This is a article, a blog that we sent out last night on FOMC and the impact on gold, NASDAQ, and US 30, directly what we will be looking at today. So I'm going to go over this blog with us today, and that's why it's important. The blogs that we send out are relative to what's going on in the markets, like in real time. So this can give you a little bit of feedback, what we're doing on our live sessions, to give you guys a little heads up. So that's why these blogs are important. They're free, they're good, they've got a lot of education, and you can continue to learn with these. Okay, and then you can prepare yourself for our calls. Basically, that's why we do these. Okay, and we got a lot of before and afters. Shout outs to everyone. You know, you get your shout outs over here, and before and afters of all the trade signals and setups and everything we do here at SST. And thank you guys. The reason why I keep telling you guys about this Telegram and I post it is because we have a lot of scammers that have used our same thing, and they're scamming individuals. They're messaging them and saying, give us this much money in crypto or whatever, and we'll return it. And that's not us, guys. We don't do that. Okay, you guys should know by this time who we are. We would never message you guys and make those stupid promises. Give us $1,000 and we're going to return you $1 million. Guys, that's red flag. Okay, so that's why I post this. It's pinned at the top of YouTube. This is our channel. Don't fall for those scammers. If anything seems suspicious, message us and we'll get down to the bottom of it. Okay, and then here's our website, guys, stocksnipertrading.com. If you're looking for education, everyone asks, Ron, where do you have education? Yes, we do. We have courses, webinars, boot camps. Everything is under this website. If you want to educate about yourself, about trading, about everything, price action, technicals, fundamentals, psychology, anything, okay, it's in there. And guys, I just want to go over the blog. Okay, I know some of you guys might say, let's get to trading, this guy's boring right now. I promise you, this is important stuff. I would not be wasting our time if this is not important. Okay, we have to know going into FOMC what to expect. Okay, so I want to read this. The impact on gold, because this is what we will be doing a top-down analysis on. We will be doing gold, NASDAQ, and US 30. So how will this FOMC impact these three securities? Okay, so let's just read a little bit. I'll read it for us. You guys can just relax and listen. The FOMC meetings are significant events for financial markets as they involve decisions about US monetary policy, including interest rates. A 0.25% cut in the Fed funds rate can have various impacts on different asset classes, including gold, NASDAQ, and Dow Jones. So what impact will a 0.25% decrease hypothetically have on gold? Interest rates and opportunity costs. Okay, so I know we just trade candles, but a lot of people don't understand, like, what will a 0.25% decrease, what will it do to gold? And so a lower interest rates reduce the opportunity cost of holding non-yielding assets like gold. Gold is a non-yielding asset. As a result, a rate cut typically makes gold more attractive to investors. Number two, inflation. Inflation expectations. Rate cuts can increase inflation. We've just said that, right? The more, if you decrease rates, you're going to print more money, and more money is going to cause things to go up. What we normally buy when we go grocery shopping, when our energy bills are going to go up. When you go buy clothes at the shopping store, you know, like everything will go up because now there's more paper fiat currency circulating in the world, right? So causes things to go up. So rate cuts can increase inflation expectations if they lead to higher economic activity. Gold is often seen as an inflation hedge. It's a hedge against inflation. That's why in inflationary times, more investors flock to gold. And that's a hedge of the decreasing dollar. Everyone says, Ron, gold is pumping, gold is pumping, gold is going to all-time highs. It's not really gold is doing anything. It's just the purchasing power and the decreasing of the US dollar. You guys understand that, right? It's not just because gold is something special. It's because the US dollar is declining in value. That's what causes gold, silver to increase in value. That's what they're paired against. That's what they're correlated against, okay? So higher inflation expectations can boost demand for gold, okay? Dollar weakness. A rate cut may weaken the US dollar because lower rates make dollar denominated assets less attractive. So since gold is priced in dollars, a weaker dollar can make gold cheaper for foreign buyers, potentially increasing demand. Okay, so that's a quick little analysis on gold. Does that, you guys know that? I assume you guys know this. Does it make sense? So this is how you can kind of tie in like some fundamentals with what's going on with a rate cut, right? That's specifically for gold. So what will be the impact of a 0.25% decrease on NASDAQ? Let's read it. Cost of borrowing. Lower interest rates reduce borrowing costs for companies, which can be beneficial, especially for tech companies like Nvidia, Apple, Microsoft, that may rely on cheap capital for growth and expansion. Risk appetite. Everyone has their own risk appetite. Rate cuts can boost investor sentiment and risk appetite, leading to increased demand for equities, including tech stocks in the NASDAQ 100. Valuation impacts. Tech securities, often valued based on future earnings potential, might see an increase in valuations as the present value of future cash flows increases with lower discount rates. So a decrease in interest rates may cause more demand for tech securities, and we might see a bullish move in NASDAQ and in the stock markets. Not always, but you know, this is normally what happens, okay? Unless it's already baked in and the market has another direction to go, okay? And it doesn't have to be immediately. Like you understand that this news could be released, they could dump the markets, and then within a couple days, then start buying it back up at lower discounted, and then continue with this and taking it back higher and possibly to new highs. Okay, so that's what we got to do. That's why we have to study the technicals to see exactly what they're engineering. And then finally, there is an impact on US 30. So you know that Dow Jones is not similar to NASDAQ. These are two different indices, and they're comprised of different components and different companies, and they're weighted differently. So these two securities are not the same. Okay, so number one, economic growth expectations. A rate cut is generally aimed at stimulating economic growth, which can enhance the outlook for industrial and cyclical stocks included in the Dow. The Dow Jones is called Dow Jones Industrial Index. So it's comprised of a lot of industrial corporations. Corporate profitability. Cheaper loans can increase corporate profitability by reducing interest expenses, potentially boosting stock prices for companies within the index. And sector rotation. So this is where securities start to rotate liquidity. If a certain sector is hot, maybe it's cooling off, then it will move liquidity into another sector that's been cool for a while and stimulate that and cause that one to go up, okay? So sector rotation. Investors might rotate into sectors that benefit from lower rates, such as industrials and consumer discretionary, which could positively impact the Dow, okay? And then finally, some tips for some traders, and Chuck Norris approves these tips for us. So when Chuck approves, we got to go with these. So number one, Chuck Norris approves us. Monitor your Fed communication. Pay close attention to FOMC's statement and any forward guidance provided. So if you're not trading, you should be listening to what Powell is saying. Even if it's later this evening, listen to it again. I do that. I listen for future guidance because sometimes they give you a little, some hints, some clues as to what's to come. And I know we're not just trading for today. We're looking to trade into the new year and start of next quarter and everything like that. So let's listen for some guidance that they're telling us, okay? Because that can help us understand how the markets are going to move going forward into 2026. Okay, so future policy direction can influence market reaction significantly. Focus on inflation data. Keep an eye on inflation metrics, as changes in inflation expectations can greatly affect both gold and equity markets. Diversify. Consider diversifying your portfolio across asset classes to manage risk, especially during periods of monetary policy shifts, volatility. Volatility makes preparedness. So be prepared for increased market volatility around the FOMC announcements and maybe the day after. Okay. Utilize your stop loss orders and other risk management tools. If you go all in and you full port, that's on you. Good luck to you. That's all I'm saying. Technical analysis. Use technical indicators to identify key support and resistance levels for trading decisions, particularly in volatile environments. Finally, Chuck Norris. Economic indicators. Stay updated with major economic indicators and corporate earnings. That's why we follow our earnings schedule, pre-market and after hours, to the big companies that are reporting, as these can provide insights into the broader economic impact of rate changes. Finally, traders should assess their own risk tolerance and stay informed about macroeconomic developments to navigate the market effectively around FOMC set meetings. Okay, so Chuck Norris approves. He gave us some tips. And now it's time to get into the charts. But before we do that, guys, thank you everyone on YouTube. If you guys can kindly leave us a like, I promise you guys will continue to educate with us. I promise you'll learn something new on every single call. And subscribe to the channel if you haven't already. We are on an uptrend and we're skyrocketing. But once we start breaking this resistance and we start coming down, the motivation just is not there anymore. Okay, so you guys continue to keep us motivated, and that's why we're here. Just a quick little recap. Remember our swing trading sessions. So this green zone, remember, this is on the 4 hours of gold. Look, when we talked about that one that came in there, back up, and then last night, you see it hit the top of the red zone, and then this big 4-hour bearish candle came right back in, and it came right to the bottom of the green box and back up and closed strong. And again, early market open, again it dipped in here, so it kind of triple dipped in here, and it's a bullish spin top pin bar candle. So the 4 hours are building a bottom. So we're about an hour and a half away from FOMC. So on the higher time frames, on the 4 hour, you got it coming down there, going back up. There's the neckline, and you see it's making a higher low in this block. So it is starting to come up, but it's still got these ugly wicks here. So it's still kind of consolidating in here. Yes, it could break out up to here, break out. It could break out and get rejected and come back down. Or it could open and keep coming down and break through this block, and it's bearish. But you see how our 4-hour bars are still holding in this 4-hour point of control of this candle. So it's still holding. We still haven't looked for a swing trade because it's still kind of consolidating in this area. Okay. And guys, so welcome to our live FOMC. Right? Make sure you guys are ready. And finally, again, I'm going to just remind everyone, proper risk management. I'm going to do a top-down analysis on gold, and then we're going to do a top-down analysis on NASDAQ and US 30 over here. And we'll keep the NASDAQ and US 30, we'll keep these ones side by side, and we'll keep gold on its own separate chart. And we'll watch these three securities going into FOMC, okay? And thanks everyone for joining. Good morning, good afternoon, good evening to everyone. Justin, welcome. Big day today, yes sir. Sergio, thank you for joining. Emmanuel, welcome. You're ready to rumble? You put aside $200 for this. It's like going to the casino, leaving your wallet at home. Hey, for some traders, that's how it is. But at least you set aside $200. If it's gone, it's gone. At least you're okay with it. It's same analogy. You go to the casino, you leave your wallet at home, you go into the markets with $200. Maybe you double it, maybe you make something, maybe you lose it. But if that's the way how you're going to go about it, at least you have a plan and you've managed it. So I respect that. So, but if you lose it, don't go to the ATM machine and keep pulling out money and putting it back into the markets. Okay. And everyone else on YouTube, thank you guys for joining. From the top, number one, who we got? Romario Brown, my man. Thank you for joining. Rush, welcome. Raj, welcome. Sergio, thank you for joining. Patricia, thank you. Thank you, guys. We appreciate all of you guys. Charles, thank you for joining. What's going on in the YouTube chat, guys? How's everyone doing? Romario, it must be -50 in where we are. It's cold. It's cold, and we got a lot of snow, a couple feet of snow over here. Yeah, if you guys like snow, you guys can come out here and visit me. I'll exchange with you guys. If you guys are in some hot tropical Caribbean, I will trade you any day. You guys can come here and you guys can enjoy the cold winter and the snow, and I'll enjoy the sun and the warm weather where you guys are. We'll make a swap. We'll make a trade, okay? I'm making an offer. Is anyone bidding on it? Okay, guys. Yeah, it's a fair trade, fair value, okay? So that's a good trade. You see, we can educate trading in the real world. Any offers? Okay, so let's start off on the daily, okay? So I'm gonna do a top-down analysis now, okay? Most of you guys already have your charts already done. Perfect. I'm gonna do one for everybody like I do every single day because it could be someone's first day on the call and we don't wanna kind of leave them behind. So, and it's good education for everybody here because when we're doing it on the higher time frames, we're gonna do the same thing on the lower time frames. So when you see me identifying a point of interest, I'm going to look for a point of interest on the 5 minutes. When you see me looking for a point of control on a daily candle, I'm going to be looking for point of controls on the 5-minute candles. When you see me looking for patterns on the daily, I'm going to be looking for patterns on the 5 minutes. I hope you guys all understand that candlesticks all have the same characteristics. It doesn't matter what time frame you're on, okay? If I got rid of this watermark back here and I got rid of these were on daily candles and I told you guys these are 15-minute candles, you guys would have no idea. You guys would have no clue because this could be a 15-minute chart. This could be a 1-minute chart. This could be a monthly chart. It doesn't matter, right? So just what I like to do, someone says to me, well, Ron, why do you do this then? Why don't you just jump in on the 5 minutes? Why don't you just go in? Because it's like getting a bird's eye perspective and looking from a top down. So you can see how it's been moving the last few months, how it's been moving last few weeks, how it's moving going into today, and then you can kind of dissect it and get it down to lower time frames, and at least you have a little bit of a bias going into your trading. So that's always good. Otherwise, if you don't have that, then you're basically just trying to guess at the moment when you're trading, okay? So, and also we look for high probable setups. So this is another reason why we do it. We don't just do it to get a bird's eye perspective and to give us like a general bias. It's to identify the high probable points of control or points of interest, because that's what we trade off of. That's why we place alerts in those zones and we allow the volume to patiently come there. And then that's where you can more than likely find high probable setups with more volume that's trading at that time. So that's another reason why it's beneficial to do a top-down analysis, okay? And this is gold, okay? So we did hit an all-time high right up here. So I'm going to use an orange line for all-time highs on all the charts, okay? So you can see on Forex, gold's all-time high was right around here, 4,382. If you're trading your futures charts and you're trading GC, you probably hit 4,400 in the futures, okay? And now what I'm looking for, again, and if you're trading futures or Forex, technical analysis should be very similar. The bars should be very similar. The candles should be very similar. Yes, I know that they have different numbers because they're trading. One is trading in the futures, one is trading right now. Like, you got to understand these things. But if you're following your futures chart, you can still do your analysis like I'm doing, okay? And now I'm looking from the all-time high, from that orange line, I'm looking for a zone. I'm looking for a zone of where the sellers are. This is where I identify a zone. Someone can identify a zone down there. That's fine. That's your perspective. That's what you're looking for. I'm looking more for this zone, okay? And then this is more a point of control for me. So now that I've identified it, you see how I identify it? Just now what I'm doing is stretching it into the future, because if it ever comes back in here, then I know that the volume is trading in the all-time high supply zone, just right below the current all-time high. And there's already been one top where it got rejected down. So, you know, when I'm recognizing patterns, when I see it come all the way up and then come all the way down, there's the support, the neckline, and now it's slowly coming all the way back up. What happens if it transacts right back in there and then it's a double top and we see gold doing that? then that's a pattern I recognize. This is a pattern I've traded a lot in my day, and I know what type of what to look for, what options I have up there. So this is like option one. It could come right back in there, tap in there, and it is an equal high, double top, and a drop. That's option one, okay? And this can be on the 5 minutes. This can be on the 15 minutes. This is on a daily, what could happen, okay? And another option is, so I just want to go through the options and eliminate this, because then I don't have to keep telling you guys this on when we go to different time frames. And so this is across the board for everybody. So pay attention. This is the time where we're learning something right now. So that could be option one, right? What is the other option? It could come up here and break out. Okay, then we have a new higher high breaking out from here. It's in this situation, it's a new all-time high. So when something breaks out and the candle has not closed, there could be an impulse breakout. So it could be a big blue candle breaking out of here half the day, and in the second half of the day, sellers are there, and then there's a wick, and then they push it right back down, and it closes back below the red zone. Okay, if I see that, then it's still a red zone. I see that they spike the liquidity, whether it was a sweep or a liquidity hunt, whatever it is. I see it was a false break up there, and buyers did not close it convincingly above the zone. It got rejected, so it could come right back in this red zone, and now a lot of sellers are offering in there due to the liquidity that was grabbed, and that's the second option. Then it could sell down. So it could sell right in the red zone, or it could be like a fake out up there. And then the third option that we look for is you get a breakout similar to this breaking out. It is an impulse. However, the candle closes blue above there. So that's called confirmation. The buyers broke for a new higher high, in this situation, new all-time high, broke it above and closed it above. Then what I do is when I see the closing, I use the same zone. I don't change the size of it. I just change the color of it. I make it to represent buyers now, because when they closed above, now this could be populating with pending buyers that want to get in on a discounted pullback at this zone. So if it closes up there, then what we're looking for is the sellers to sell it back down and retest this zone. And if it fills and gets those pending orders, then it's got a high probability it wants to continue to break out and go higher, right? But not always the situation. It could come down in here when it's coming for the retest and do this and break right through there again and then closes below. Then we look for selling. Then we know that they were false breakouts, right? So those are your options. And you're going to get used to those options, because they're going to present themselves every single time when it's coming into a zone. And the same can be said for the opposite if it's going down and you're at a supporting level, okay? So this is red zone, all-time high. Did that help, guys? Or I got to know. Some of you guys know this, or does this help? Because that took about 5-10 minutes out of the call. I want to know, is this a waste of time, or do you guys benefit from this? I know these things. I don't need to continue to educate myself. I've been doing this for almost 20 years now. So I want to know, does this help you guys? That's why we do this. I don't need the extra help. I know these things. That's why I can teach on these things. But good? All good? Okay. So now, since we found a red level, can we find a green level? How do I find these? Look for pivots in a market where the market just stops moving in one direction. So you see when it came down right here, it stopped right there and went back up. And then when it came back down, it stopped again there. So that's what we call a double bottom. And the double bottom traditionally has more volume, the second leg, and which it did here. Here's a showing it. But when it came up, it got rejected right there and came back down. There's another pivot and came back up, okay? So this is a yellow line. Yellow lines on my charts are daily points of interest. And then when you can match it up with the number, and it's a nice psychological number, then it makes even more sense. So you see how the yellow line where I just placed it at those bodies, and it's 3,925. That's a very psychological number. If you think of an auction, 3,900, 3,925, 3,950, 3,975, 4,000, 4,025, 4,050, 4,075, 4,100, so on and so forth. Look at what we're trading at right now. Right now, currently, gold is trading at 4,200 on the dot, right? So it's just, these are psychological numbers that you have to understand how markets move. Okay, this is called auction theory. We can teach up on that as well, but it's just pretty much just locate these psychological numbers, and it's like a magnet. So a lot of transactions occur for efficiency at the markets at these numbers. Do you think gold just by chance is sitting at 4,200 right now accumulating? And no, and I think it's going to accumulate, and it could break out to 4,025, 4,050, or it could start dumping down to 4,175, 4,150, right? Just by using those psychological numbers. Okay, so it's made a nice bottom. And then when you look just below the yellow line, you see that big ignited bullish body that created the move to go to the all-time high. So when we see that, let's just box in that body right there. And it's an ignited bar. So there's an importance when you learn about what are ignited bars. So you see how it opened, and I caught that right up to there. Now when I stretch it in the future, I can see that that was a big black bearish day, and it came right into that zone and right back up. And you see those wicks too, still respected in that green zone. So that is a green zone. Stretch it into the future. Bring this thing into the new year if you guys like. Bring it into January, February, March of 2026. These are your static levels, okay? And then what I do at these situations is, at this level, I place an alert. And if gold ever comes down there, I will be alerted. And when it comes down there, I get an alert. That doesn't mean I just buy blindly. I watch and see what happens for those three options I told you. It could come right in there and bounce out. Option one. It could come in there and sellers are strong and they break it through there, but it doesn't close down there. It's an impulse, so it's a big black candle like this one with a wick, and then all of a sudden it comes and it closes back up here. Then I'm looking for option two to buy out of there. Then I know it was a liquidity grab and a fake out and a sweep of all the volume down there. And then finally, the third is sellers continue to break it down, but they close it with a black bar below there, and then that's confirmation that the sellers broke that zone and closed below, and then buyers buy the dip, and then this is where I make the green zone red to represent sellers, and they're there now offering at that lower high to push the market down. Remember, I showed you the three options up here. Those are the three options on the buy side, okay? Just opposite. That's why I love trading, because when you learn what a bullish candle is, you can easily learn what the bearish candle is. It's like a brother and a sister. The bullish candle is the brother, the bearish candle is the sister. When you learn the bullish patterns, the opposite are the bearish patterns. A bull flag has a high probability of continuing to go to the upside. When you spot a bear flag in a bear trend has a high probability of going to the downside. When you learn all of these things, it's just opposites, right? So that's what you got to learn, okay? But you're basically learning the same thing, just opposite direction, okay? Now, when we push down, see this big significant bearish candle. I talk about these all the time. This is a structural candle that engulfed a lot behind it. This blue bar, this blue bar, that blue bar, this blue bar. So one candle liquidated like 4 bars. That's significant, okay? So it really engulfed. So that, and it's full of volume, okay? It's not like what we're seeing right now, these wick candles. This is a statement candle. This is a serious candle. Whenever you identify those are great candles to analyze. Very simple. The way how to analyze these is get your Fibonacci tool from the opening price and bring it down to the closing price. You see how simple that is? I didn't do anything spectacular, okay? Very easy. And all I'm trying to identify is cutting it in half. Okay, when price gets too high, what do? We cut it. When price gets too low, what do? We cut it, okay? Simple, cut it in half. We want to find the psychological middle, the psychological midpoint. If something is $50 today and it's $100 tomorrow, what is the fair price of that item? You don't even have to tell me what the item is. I don't give a shit what you're selling me, but because I know how price works. So I don't think you're going to give it to me for $50 because that's the lowest price. You got to make something. I definitely don't want to pay $100 because that's the highest price. So what is fair for me as a buyer and what's fair for you as a seller? Right directly, right in the middle, 50-50. So if something is $50 and 100, fair value, $75. We just cut it in half. You're happy, you made $25, and I'm happy because I got a $25 discount, right? That's how psychology works. Does it work like that in the real world? No, so that's why you got to be good at looking for good deals, for finding discounts and things like that. So I cut that big day in half. Okay. And now I don't just want 50%. I want to find a little bit above and a little bit below because I know there's going to be a lot of transactions in around that psychological midpoint, that zone. And Fibonacci is a great tool because this is called the golden ratio or the golden zone or the golden pocket, whatever you want to call it. Hot pocket, pizza pockets, I don't care what you call it, Mickey Mouse pocket, call it whatever you want, okay? But you got to know what this is, okay? So once you identify it, someone says, okay, Ron, this is easy. I identified it. Here's another easy part. Stretch it into the future. Because if the market ever comes back to transact in this location, look at the results. That's a bearish point of control. How many days did it come back in there? Look, count the days. These are bars, these are days. 2, 4, 6, 8, 10, 12, 14, 16. On the 17th day, it came back in there. So that's 17 bars. If I'm a 1-minute trader, that's 17 minutes. I can wait 17 minutes. If I'm a 5-minute trader, 5 multiply 17, that's how long it takes to get in there, right? So this unfortunately took 17 days because you're on the daily. But look at the results when it came in there, right into 50%. The sellers were there offering and continued with a lower high and pushed the market down. But you see, it didn't come all the way down to this green zone and kept breaking down bearish. These buyers stepped in where approximately 50% of this big bullish candle, that this was a statement candle that closed above this double bottom right there. You guys see what I'm seeing? Or if you don't see what I'm seeing, smoke some weed. Oh, guys, sorry. This is announcement from our sponsor right here. Sorry, guys, got to cut you off for 30 seconds. Sponsor announcement. This is from Fraser Valley Weed Company. This is the finest sativa and hybrid weed you can find. Shout outs to our sponsor over here. No, I'm just playing. I'm just playing, guys. I'm playing with you guys. We are not sponsored by a weed company. But that would be funny. Oh, man. You guys are cool today. Okay, so it pushed down and we gotta continue with this zone into the future. Now you can see this day, look at Friday, end of November, we were trading in here, early December, coming in here just prior to FOMC, just trading inside here, okay? And keep stretching this zone into the future. Now I'm gonna ask you, have the buyers closed it with a blue candle above this yellow line? Answer is no. Have the buyers closed it with a blue candle above this red zone? Answer is no. So this is telling me sellers are here. They are offering. And the buyers, look at the buyers came up and they got rejected back down. They came in. So all of these wicks are lower highs. We're building below this yellow line, lower high. And this point of control is protecting the all-time high zone, okay? So they are offering and they are slowly trying to push it down, okay? So stretch that zone into the future. And if you like, at that yellow line, place an alert in there. If gold ever comes in there and closes above, it could flip and be bullish and go straight to the all-time high, right? So it's still bearish. Now, what else do we have? Do we have any other points of interest? Absolutely. Right here is a point of interest, okay? Right in here. So this body right here, let's analyze that. Let's cut this guy in half, open and close, cut it in half. 50%, same shit what we're doing. Now we're just doing a bullish candle. And then a little bit above and a little bit below. Now I find the bullish point of control. Wow, look at that. Look at all the wicks that broke and no black volume closed below this point of control. Simple shit, guys. Simple shit. Nothing complicated here. My daughter, I'm going to get her. Guys, I'm going to retire soon. My daughter is going to be here, 9 years old, and she's going to take over these sessions. She's going to teach you guys how to find these zones and what they represent. I'm telling you. She's 10 times better than me at identifying these things. So she's my high frequency trader. I'm going to get her in here soon when she gets a little older, and she'll be doing this. And then you guys can learn from her. Now, look at what's going on. So we came down right here, coming back up. That point of control, bearish point of control, holding up. We come in here. There was a impulse break, impulse break, impulse, impulse. If you sold on those lows, unfortunately, you're in drawdown or you got stopped out, okay? So that's why if you waited for those bodies to close, they closed above the green zone, you could have been buying and you would have been making money, okay? So that's the patience and discipline I talked about. And look at it, came in there, back up. But now we're struggling here. So there's a double top in this red zone. So it looks like this FOMC could push gold down, back down into here, or it could spike back up through here. And to me, if it spikes up, I think it's going to be like a liquidity grab. I think if it comes up here, it might be a wick coming back down, and I think gold will sell. That's just my bias right now. Observing what's happening on the higher time frames. But we're not there yet. And then you see these nasty days like last week going into FOMC, it's really not going anywhere. It's just holding up. So where are we holding up now? Let's look at this big bullish candle right here. Can we do some work on this? Opening price, closing price, 50% right there. Okay, and now it's going to get a little complicated because it's going to be a green zone right below red zone. But we're still technically trading in the bullish point of control of this body right here. See, the sellers even dipped it down, back up, came down, back up, came down, back up. Yesterday in there, so we're still transacting in this zone. So you see how like ugly it's getting on the daily, okay? And then all we got to do is identify like that wick and these bodies, because if it breaks, this is the only thing basically holding up gold right here at around 4,150, 160 right here. Because if this breaks, could be a big drop down where right into cut that candle in half. There's a little fair value gap you can see right there as well. I don't do it with fair value gaps. I do it with my system with the Fibonacci tool. But you see that wick right there and that wick right there? See that little piece of blue volume that has not been mitigated or tapped into or transacted? If you just cut that shit in half right there, that's the halfway point. And look at where it is, 4,100, right? So if it comes selling all the way back down, there could be buyers waiting right there. And the reason why they're waiting right there is to prevent it from coming into this block, and they want to create a higher low there, okay? So at each one of these yellow lines, you can put an alert. And when it gets there, you might be looking for a high probable setup, okay? So right now on the daily, it's hard to see. We're trading right in the neckline. So FOMC could spike it back up, and then we got to maybe see a lot of rejections up here and come back down. Unless they can prove to us they can close it above here, then okay, they prove it to me. I'll flip this zone back to green, and it could be going to all-time highs. But we could also be coming down, closing below here, and then tomorrow and next day, gold is selling off. Or it might come back to retest, then they drop it. But the way how it is right now, it's hard to say. We're right in this block, and it could go either direction, up or down. But if we look at how it's the wave, this wave right here, okay, I always look at waves. This is A, B, C. It's trying to do the D, but it's not there yet. So, you know, to finish off a wave, you got to see that E, and then it kind of finishes off the pattern, and then you see the head and shoulder, okay? So you see they still haven't finished off the E, or if you count from 1, 2, 3, 4, 5, that finishes off a wave. If you ever follow Elliott wave theory, that's how a wave works. I don't see the fifth wave or the E wave. So you got to be very careful. Okay. What else we got going on? Okay, so on the daily, we're good. Now, if there's a trend, you can see that there's clearly a trend on the daily as well. Okay, if I kind of implement it from point A to B right there. Now I got to stay consistent with A to B, and that's the daily trend right there. Okay, I'll make it yellow to represent daily. I'll make it thicker so we all can see it, and that's the daily trend line. Okay, we are still technically in an uptrend off of this move, right? But if we look at overall, we are still below the all-time high, and we're still below this block, okay? So you got to consider this to be like a lower high, and could happen. Bigger perspective, pattern recognition. We came up, we came down. Now we're coming up. So is it going to come all the way up to the all-time high, double top, or this lower high, which is already intact, where they've rejected it there? So we're here. And then you could see that lower high breakdown and then that drop. Okay, so that's what we also have to watch for on gold. What time we got here? 12:49. Okay, so I got to start going a little faster now because we got to do NASDAQ and US 30. So I'm going to go faster. You'll see. So I'm not going to be explaining NASDAQ and US 30 the way I'm doing. I'm just going to be finding zones, points of control, and keep moving. So that's what we are on daily. Now, if we move to the 4-hour, remember we're doing our 4-hour analysis on our swing trading on gold, and the 4-hour candles came up, they came back down. They're still concentrated in this area. There's no real big move yet. But what I can see on the 4 hours in this big red block is lower highs, lower high, and lower high. But when it's coming down here, I see a higher low, so still building. So it's still concentrated in here, but it looks like it maybe is kind of pushing down where they want to redistribute it to the downside. But they could cause it to go bullish and then drop it. But the way how it's looking right now from the last few hours, right here from 10 to 2 a.m., bearish engulfing, and it took out all of this bullish run. Here's European volume, very bearish. We opened up 6 a.m. to 10 a.m. It came up, that was very bullish, but then they rejected it as a bearish pin bar. And again, when this opened, it didn't break. It's coming up right now, 10 to 2, and this candle's closing right at FOMC, so it's kind of building. But if they keep rejecting this, and by the time we get to FOMC, if they exhaust this buying volume, then you could clearly see that it might be bearish and just start filling these wicks, and gold is bearish. Okay, so we got to consider that. But right now it's still holding inside this green zone. So on the hour now we go more into individual hours. So look at the hourly. It's making a double bottom. It came down. When was the lowest point? 5 a.m. So I can see here's Europe, 2 a.m., 3 a.m. is London market open. There's 4 a.m., 5 a.m. Then we moved up. Here's pre-New York, 6 a.m., 7 a.m. Here's COMEX right in here, and that North American news at 8:30. Then here's kind of like going into 9 a.m. This is kind of Wall Street's market open. Doesn't really impact gold per se, but does impact the US dollar, and US dollar is correlated with gold. There was a move coming down, came back down here, double bottom, and we have this big bullish candle at 11 a.m. and noon is bringing it right back down. So we're still kind of barcoding on the daily in here. Yes, it could break out. So if it does, come up bullish, and we're in a buy, let's just map out where is the hourly resistance. I would say right here. I'm going to draw a white line for hourly. Why did I put it right here? Because that was the highest point, that wick right there. I could go a little lower and get it down more touches, a wick, and then get that's an impulse and back down in there. But right around that level, 4,220 on the dot. So just put it at 42,220. You guys know, if you've been trading gold lately, 42.20, every time it gets up there, it's not breaking. It got up there and rejected, got up there, rejected, got up there again, rejected, got up there again, rejected. So what happens if it comes up there again? Probably going to get rejected unless the volume is breaks out. And then if it closes above here, then we have a nice hourly point of interest. We could use that for retest buys off of that white line. Okay. And then also, if we start breaking down bearish, where's our hourly support? Look at right here. When it came down, it went back up. When it came down, it went back up. When it came down, it went back up. So let's try and place a white line at a strategic area. I'm going to place it. See, this is where you got to kind of, freestyle it a little bit. And then I'll place it, and I'll tell you why I'm placing it here. Reason why I'm placing it here is, see this big bullish candle? I just cut it in half, and then I got that wick. I got those two wicks. I see that this was a false breakout where they broke it down, but it closed back above, and then it retested the white line. So this area, 4,177, I would even make it psychological, 4,175 is a key hourly supporting level that could hold gold up. If this breaks and we get volume closing below, we're going to use this white line as the resistance to continue to take gold down. Does that make sense, guys? Okay, so you see I have yellow lines. Yellow are daily points of interest. You see they're above this white line and it's below this white line. These are more hourly points of interest. Okay, and if I'm scalping, I have to respect these white lines, but if I got to respect more the yellow lines because they hold higher time frame. Okay, does this make sense? Right? This is how I color coordinate my charts. Now I move to the 5 minutes, and this is what I scalp. This is how I trade. This is how my chart is set up, like a grid map, right? And then I read the tape. So if I'm taking a sell, let's say, for example, from the bottom of this green zone and it breaks and it comes down to that white line, I know what that white line is. It's my hourly support. And if it comes down there, look at it, 100 pips. That could be my daily goal, just right down there. Obviously, I want it to go down to that 300 pips, to that daily line, and maybe to the daily trend line, 500 pips. But you know, the market could just come down there, catch a wick, and go right back up. If we look in the past, look at the 5-minute candles. When they did break down, they broke down right there, okay, right to the white line. There was that drop when we looked at the hourly wick. Then it came right back up. Then look at it came back down, retested the white line. There's your bottom, and then right back up. You can look at right here. Where did this double bottom on the 5 minutes? It dropped right down to the white line, right back up. Dropped down to the white line. There's your double bottom. But when it broke, there's that 4,200, that 4,197, the daily point of interest that's holding like a big ceiling up there, like a big wall. So that's a good area. If I get 100 pips, I'm reducing my risk. I'm going to a break even. I'm taking out 80%. I'm leaving 20% running. If it wants to go, it could let it go. But history is telling me that there's a lot of buying on the lower time frame sitting right there. So and also same situation if we're going up. If it's a buy breaking out of here, I can measure it. I know what the bottom of my red zone is. This is where the big sellers are. So, but if it squeezes in there, there's my hourly 4,220. And we can look back in history and see when it squeezed out of here, right up to there and back down. There's your double top. We sold this. That was that noon move we had yesterday, right? And then here was it again. If you were following, like triple top here and then back down, came back again. Look, and now they've lowered offers to the red line, coming back down. So right now, this is what gold's doing. I'm going to let gold just continue doing what it's doing. We'll come back. We'll revisit this. I'm going to add the daily bar indicator so we know how the daily is moving. There's our opening price. Sorry, opening price. It was initially bullish where we came up to there. Got rejected, came all the way to the lowest point, and now it's coming right back up. So we have a spin top on the daily with 3.5 hours left to go, going into, with 3.5 hours to go leading into FOMC. So and then if we add some EMAs, EMA 9, we're right at it, is this green line, and EMA 200 is right there too. So when you see the EMA 9 and 200 like parallel with each other, on top of each other, it's choppy. It's choppy and a lot of fake outs. Okay, you kind of want to see the 9 diverging away from the 200, either crossing above it and diverging away, then it could be short-term bullish. Or if the 9 is crossing below the 200, what it's doing now, you want to see the 9 kind of diverging away from it, then it's bearish. Okay, that's how to utilize those EMA indicators if you choose to. Okay, so gold is over here. We're leaving gold on its own chart. We will revisit this. It's 1 p.m. So for the next 30 minutes, 15 minutes each, I'm going to do US 30 and NASDAQ full analysis, and then maybe take a 5-minute break for everybody, and then we get ready for FOMC. Okay, so right over here, guys, I'm going to do the same type of analysis, but I'm going to move faster now. I took my time with gold to make sure everyone is understanding what I'm doing, but now we're going to kick it up a notch. Okay, so we're going to go a little faster here, but I'm going to do US 30 first, then NASDAQ. So, and then we'll leave it side by side like this when we're in FOMC, and then I will flip from gold to here, to there, to there. Okay, it's hard to put all 3 on one chart. It's too much. It's too busy. So I'll put the indices separate and gold on its own. Okay, now let's click on US 30. Let's get into it. Okay, first let's take a sip of some eggnog. I need some eggnog. This is good stuff. Eggnog is great in holiday season. That's some good shit right there. Okay, on the daily, and sorry guys, we have almost 350 viewers on YouTube. If you guys can kindly leave us a like and subscribe to the channel, maybe you learned something on that top-down analysis. Maybe you're gonna learn something. Have fun. Everything is live. Let's have a good time. Subscribe to the channel. Okay, now US 30, Dow Jones on the daily. Okay, remember this is industrials. Okay, so this does not have to do with anything to do with tech. That's more NASDAQ. Okay, now let's start our analysis off on the daily. Do we see something? Yes, I see that this is the all-time high right up there, 48,450, 460, all-time high. Is there a little bit of a zone that I can maybe identify? Remember I told you guys, sometimes it takes 2 bars and that's all you need to identify a zone. So right there, if I come down to those bars and I make it red and I stretch it into the future, look at what we see. Okay, so there was the big drop at the all-time high. Here's the pivot that came right back up. And look at, we transacted in there, and they still pushed it down. It could be coming back up and they push it back down. So I can tell that we're below 50% of it. If I look right at 50% and I cut this zone in half, okay? Right there, we cut it right in half. And it's still, I can see it came in there and it's still below it and still pushing down. So this all-time high supply zone is still active in the markets and it's still holding. So what I do is I stretch it into the future, into the new year. Okay, and you guys know those options. What could happen up here? Comes up, gets rejected, goes up, impulse back down, or breakout, close above. We flip this zone green and it goes to a new all-time high. Okay, so let's follow the big selling leg that came down. That was, the market is not crashing. It corrected, it pulled back, it came back, but look, this bounce is a higher low, this is a higher low here. So how I'm hearing that the market is crashing. Where and how is it crashing? It's if it starts breaking below this structure and closing below these levels, then it's correcting itself because it's been on a massive bull run for the last few years, since right here and over here. So it's been on a healthy run. And could still continue to drive up, okay? Remember, rate cuts allow for printing of money, and for these type of assets in Dow Jones and NASDAQ, we could continue to see more money moving into these assets and causing new highs, okay? However, we can't be naive that it comes in here and selling off and coming back down, and maybe here's the double bottom down in here. So there's my daily point of interest. And then I can see, then I go look below the yellow line. I can see right there, there's a body, wick, and a wick. So it looks like a good area to identify a box. And it was from this big blue candle right here on September 11th. Hold on, guys. Oh, that's Powell calling me. Should I talk to him? Should I tell him pump the markets? What should I tell him? Powell's calling me, guys. I'm just playing. I wish Powell was calling us. Okay, so you see what I did. I identified something, stretched it in the future. I see how that box is still holding up, Let's stretch it into the future. If it ever comes down to 45,600, that could be a fantastic area to look to load up on Dow. Okay, but it's not there yet. Well, what can you do? Place an alert in there and be patient and wait for it. So now I see something, a pattern I recognize. A leg coming down, leg coming up, and slowly it's kind of holding right here. So I can see a daily point of interest. So it could continue to come up. What about that? Is that not a pattern you guys recognize? Double top, then we drop. Where are we dropping down to? Cut this big body in half, right in there, give you a little point of interest right there. And that's what we could be looking for, okay? So, but there's structure holding right here now. So we can see where the neckline is, where the pivot is. It's right there, 47,525. Listen to those psychological numbers that I'm talking about, okay? And we, right now on the daily, we've got a nice big bullish engulfing candle engulfing. So it could continue to drive up. It just has to continue to do its job, filling that wick and maybe extending out. However, it could sell back down, but it's still strong. It could refuel itself and come back up. So it's tough to say which direction US 30 can move right now, but it is moving back up. So let's just follow the volume from yesterday. Yesterday closed right at the lowest point with a big wick, so very bearish. And then they opened it up and it was bearish, but it didn't really do its job, fill that wick and break down lower. So buyers came in with a higher low right there. There's my purple low of the day and pushing it right back up and to the opening balance. And we got this nice big bullish engulfing bar right now. It's made a high so far, right up to here, and there's a little bit of a wick rejecting it, but it could still break out and continue to fill yesterday's wick. So what we can do is identify yesterday's wick with a yellow line and let us know if it gets up there, what it represents. Yesterday's high, and then there's a body and a body there. And look at the number, 47,950 on the dot, another psychological level. And they could be holding it down from trading back into this big red zone. I've got a rejection, and another rejection. So we already have a rejection, but we have still strong bullish volume behind us, okay? So it's very strong still. If it does flip and go bearish, then it breaks down. Then we got to identify if we can break these bodies down here, 47,300 daily point of interest. And then I got my cut line down in here, cutting that body in half. If you want to find the zone of this bar too, you can do that. Open, close. See where I was, right at 50%. Ron does this every day, all day, every day. So I'm pretty good. I don't even need to use the Fibonacci tool. I'm just using this for you guys. Okay, so there's that zone below. And then you can backtest and see it was resistance right there. It was support right there in the past. You can just go back and you can see it was a red zone right there. So the zone is zoning. It's just the only thing that's moving is volume. The volume is the only thing that's variable. These things are static zones. They're static blocks in the market. It just, they fill up with pending orders all the time. Why? Because a lot of transactions occur at these zones. That's it. That's the simple explanation. There's no rocket science explanation to it. Okay, so we're moving back up bullish right now. If we go to the 4 hour, when did all this volume come in? Because we were trending down. It was coming down on Monday. It went back up on Tuesday. We came back down Tuesday after Wall Street, came back down. Here is Europe. Oh, it's all New York volume. So this is 6 a.m. pre-New York coming back up. Here's Wall Street pushing right back up. So we're coming back up with this strong leg on the 4 hours. Okay, so it's still bullish, you know. So it could definitely continue to advance out of here, but we still have a lot of resistance. We have lower highs, lower highs, lower highs, lower highs. What I'm going to identify is this big bearish candle on the 4 hour, because it engulfed 1, 2, 3, 4, 5 bullish 4 hour candles. So that's a significant bar. So on this 4 hour, what I'm doing is I'm finding the bearish point of control of this 4 hour bar. And remember, white lines represent hourly on me. So there's my white line cutting that 4 hour bar in half. And I'm going to make it the bearish point of control, red. And I can see right now our 4 hour bar just broke right through there, got to the daily high and trading above here. This 4 hour volume is closing in 53 minutes, right when FOMC starts. Okay, so we have to understand that this bar has not closed yet and is impulsively breaking through here. So that's a zone right there. If it closes above on the 4 hour, I can flip it green. And then if another 4 hour candle comes back down in here, catches a wick, it could break out and continue to advance out of here. But if they reject this, then the 4 hour and goes back down, we could have our leg coming back down, or selling leg. But this is what I'll be watching, this zone in here. And then when I go to the 1 hour, you can see where this run started, right there, 9 a.m. Wall Street, made the lowest point of the day, closed strong. Look at even your hourly candles. Had you cut your hourly candle in half, if you did, you found the point of control, the next hour you could have waited patiently 10 a.m. for the pullback, it got in there at 47,600, and it went up to just that candle alone, 750. You could have made your daily goal just by waiting patiently for that pullback in the point of control of that hourly candle. Why this hourly candle? Look how significant it is. It's Wall Street, and it closed above all of these other bodies, guys. You see how easy this shit is? Like, come on. Do you guys not see this, or is it just me? Am I the only one that sees this stuff on a daily basis? Or are you guys starting to see what I see? You guys are quiet today. Holy, what's going on? Can you guys hear me today? Everyone is so quiet. Why? But we're pushing. So I see we created the highest point of the day at 11. Then look at the next candle. Bearish ignited, came all the way down, but it didn't close below here. The buyers brought it right back up, closing here. So we're getting like a Tetris piece right now on the hourly. And it could continue to flag and continue to break out higher, okay? Where's my hourly point of interest? Right there, 47,890, right below that daily yellow line. Why am I marking up this area? Because you can clearly see this big 9 a.m. candle, Wall Street on Tuesday, struggled. It broke impulsively, but look at the volume. Came right back down. What if we're breaking right up to that white line? That's where they could be waiting to sell it back down, okay? So right now, it's still very bullish coming up with this leg. But if we look overall, it's still lower high, lower highs, lower highs, and lower highs. So there is still sellers in the market offering. However, this is moving back up. So if we look at this, this is like the neckline on that. Remember? So you look at this whole leg coming down, this whole leg is coming back up. Now somewhere in here is going to be the fight, right? So it could come back down. It could just come down in here and continue breaking out. It could come down here, close below this, and start dropping. We're in the neckline. We're trading in the neckline right prior to FOMC, and it's in a bullish flag that could continue to break out of here. Okay, so hourly is very strong, coming in from Wall Street, right from Wall Street. And if we go to the 5 minutes, right there was the Wall Street move. 935 came back, closed above, took off, pulled back. If you look at your 5-minute locations, was this not a resistance right here? Or is it just me seeing this on a daily basis? Was that not a resistance? There it is, where it kind of closed right at it, ignited. Okay, you missed this run up, that's fine. But look at the pullback that came right back down to that red line. If you waited, how long do you got to wait for? If you miss this potential move, 10 minutes, 20 minutes, 30 minutes, 40 minutes, 45 minutes. I got 45 minutes to make my daily wage. I'm sure you guys do too. If you miss this run up, mark it. There was resistance. Volume closed above, pullback made it into support. There's 2 wicks. You could have bought, stop loss down here, take it to take out the next high, or you're still holding it, right? Guys, you got to be able to look for these things. Okay, now we are trading back. Look how the volume has thinned out on the 5 minutes at the daily high. They pushed it right back down. Now it's coming right back up. If we get thin volume, sellers could come in one more time and start dumping this thing down. Okay, so you should be able to recognize this pattern. It's up. That's one whole top at the daily high. There's the neckline right there at the bottom of the red box. The buyers came right back in from preventing it from breaking down. Now they're coming right back up. So is it going to break out for a new daily high? And then that's why I have that hourly white line marked up and then that daily point of interest marked up. And what if it just comes in here and continues to do this? Then we could sell back down to that red line. Maybe if it breaks with the FOMC volume, then we're coming down to the daily point of interest yellow and maybe the lowest point of the day. Okay. So that's how I trade, guys. That's what I see on a daily basis. And I just trade off of these points of interest. Daily candle, very bullish. Okay. So there's our opening price, yellow line, the lowest point of the day. Look how strong and bullish. It's all basically right there, started at 935. So all of this leg up is representing the entire bullish daily candles, all Wall Street. So FOMC might have something else to say. They might bring it down or they extend it and continue squeezing out of here. And all of these short sellers will get annihilated up here. So it's a very bullish candle trading right near the highest point, the wick. That's why we got to be careful and see if it's a double top on the 5 minutes to break down. But if it's selling, you still got to understand there's buyers could be here at this red line, preventing it from coming down to the opening price. If it hits the opening price, you guys can see normally it bounces off of there. Okay. If it doesn't, then that's how low it is to breaking the entire low of the day, which was established right at Wall Street market open. Okay. And then we had some EMAs. We're above this EMA 9, so it's still bullish on short term. And we are above the 200 EMA, which is showing bullish. And we got a lot of bullish volume. So the overall trend on US 30 is bullish. But has the bullish move already overextended itself and now it needs to get cooled off during FOMC? Possibly. Or will they cool it off prior to FOMC and then pump it right back up? Okay, because then this could be, if we're looking for a sell position prior to FOMC, we still have 15 minutes. Maybe we can catch some pips coming down. If you don't like that setup, then don't take it, right? Then just let's wait for FOMC. That's just how I operate. I look at these things. Like I'm thinking, are they going to drop it the second leg prior to FOMC? Then they pick it up. They're buying it on discount. Then they pump it right back up. So maybe this is the time to, cool it off. Or are they just going to hold it up here and just pump it right out of the gate? So you got to have some type of narrative when you're trading as well. Okay. And then it helps with a little bit of a bias. Then if you start seeing that playing out, then you go with the move, you go with that trade, right? You've kind of pre-planned it and then you can see it happening live. Okay. So that's US 30. We're going to leave US 30 right over here to the left of the chart. Let's take a look at gold. Gold is just, it's nasty. Okay, I told you guys, this is dog shit volume right now. Look at your cluster of candles and EMAs, and it's just, stay away from this right now, okay? If anything looks good, US 30 looks better, not great, better. Let's take a look at NASDAQ, okay? So I know a lot of you guys like NASDAQ. This is a tech security. This is not just representing US companies. This represents global companies. There's a British company in here. There's a German company in here. Like there's different securities in here. And this follows relative to tech, okay? And we talked about this yesterday. NVIDIA and Apple, just NVIDIA and Apple, two corporations in 100 of these. Those two, Apple and NVIDIA, they have a cumulative weight of 25% of the entire NASDAQ. Did you guys know that? Just a fun little tip, fun little advice for everybody. Apple and NVIDIA make up 25%, 1/4 of the entire NASDAQ 100, and that's 100 corporations. Okay, and look at the volume on the daily thinning out near the all-time high. Okay, when volume thins out, it's coiled up. Like, and then whoever wants to take it can take it. If the buyers take it, they can break it out here, new all-time high. Sellers with the volume, like you can't even get any buyers or sellers. There's nothing going on. These are daily candles. This is today, yesterday, the day before, last week. Like you can see that how important today's FOMC is. Like just the market is showing you how the market doesn't even want to make a move right now, okay? And look at how thin the volume is coming off of these big days. So this is a pattern we can recognize. There's the all-time high, orange line, Donald Trump's face, 26,285. Is there a block below Donald Trump's face? His makeup. The reason why I say that is he's got an orange face. So look at the block. You know, even if I wanted to extend it down to those bodies, that's what I'm going to do. I'm going to extend it down to those bodies, okay, give it a bigger block, and then I see that there's a wick and a wick already tapped into it, okay? And so that's our all-time high supply zone, right? I can cut it in half, sure, add a yellow point of interest in there. I can set myself up, look at the number, 26,050. Everything is all psychological. Okay, on all securities, you see how they follow these psychological numbers. So I identified a supply. I can, hopefully you guys can see this, that's a pivot in the market where it just came down, lower low, lower high, lower low, lower high, bled it out, and that's it. It stopped right there, right below 24,000, 24K. 23,990. It stopped right there and started the next leg up. So how can we not acknowledge this area? Then when you look to the left of the chart, look, it used to be red resistance, right? Right there. And then when you go across into the future, a blue candle, September 12, closed above. That's when you advance the zone green. You have confirmation. Now you stretch into the future. Look how long it took to come back and retest this block. If you waited or had an alert, you made your weekly or monthly goal and you're now on vacation in the Caribbean right now. You're enjoying some margaritas. Why? Because you waited. And now the market rewarded you and you rewarded yourself by going somewhere hot and getting away from all of this snow over here. But we're working here for you guys in the snow, okay? I would love to be in Jamaica right now. But we got to work for you guys here. So place an alert here at this pivot point. Maybe NASDAQ will come back down here 1 month from now. What if it does this? One top, all-time high. There's the supporting neckline. Now we're coming up. Look at the volume is thinning out. This is like this. If this was 5 minutes, I'm waiting for seller just to convincingly close below there. Look for that quick little retest and then that big dump. That's what I'm looking for. But every time it's coming down, there's a wick pushing back up, wick pushing back. So there is buyers right here, but they're not doing anything above here either. Why are they not closing it strong above here? So we are consolidating. Holy. So this FOMC, you can see the significance of it on tech. Tech is even scared right now to make a move. So can we find any kind of localized areas that we got to consider? I like this big bearish bar. Why? Because it closed below all of this structure right here. So that one is the one I'm going to analyze. Right there, open, close, 50%. Right there. My red block, right there. Stretching it into the future for verification. Yes, it came in there, back down. Yes, it came in there, back down. Yes, it came in there, back down. Verification into now, closing above. If I know that every time I flip it green, Then that was bearish day, came in, back up, 3-bar play, Tetris, coming right back up and continuing to move. So this is a green block right below us. We have not tapped into it. So there's a strong block right there, hidden block in the market. Okay, so now we're just trading with these choppy candles. These are dog shit candles. If these were 5 minutes, 1 minute, 15 minutes, I would be saying that they are dog shit candles. Just because they're daily candles, they're still dog shit candles, right? You can box this garbage in if you like and just continue to wait it out, right? And you got to know it's coiling up. Sellers are selling, buyers are buying. No volume, thin volume. It's going to probably explode during FOMC, okay? But which direction is it going to go? Holy shit, this one's a hard one to kind of, predict. But let's put one point. Let's follow today's daily candle. Let's do that. Let's follow today's daily candle, okay? And then maybe it will give us some sort of insight. So, or yesterday, okay? We opened, yesterday made a high, did not do its job filling those wicks, came back down, came here, kind of equal low with the previous day, didn't break, didn't do its job. Buyers came back up, closed it, spin top, 55, 45 split. Sellers were in control just due to the nature of the bearish volumes, closing just a little bit lower than the opening price. Now, when we transition into the daily candle today, there's my close, my opening price. Look at the number, 25,650, okay? Very psychological. And it opened up and it was initially bullish. It was blue, 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 came right up to here, 25,725, highest point of the day, purple line. Now I look at my purple line relative to everything. Look at those tweezer top highs. Those things, those clues right there. Tweezer top highs below the red zone. And then today's, they pinned it, they stopped it and reversed it back down. They broke these equal lows. Okay. So you gotta break equal lows. Just like when we're scalping, when I say we gotta break those in order to continue to come down, it broke, but as soon as it broke, it's coming right back up. So it's got that whipsaw coming right back up. Still a little bit of bearish volume. The sellers could continue to drive it down this wick and break and cause that new low transacting down into this green zone. However, buyers could bring this back up, flip it, and start filling the wick, and we start breaking out. Then the job of today's FOMC is to backfill these wicks and get into this red zone. And when we get into that red zone, I have the yellow line marked, cutting it in half. I was guessing at that yellow line. I don't want to guess now. Now I want to be 100% correct. So I'm now plotting my Fibonacci on that red zone. See how I was off by a little bit? I want to be 100% accurate right there, okay? And now let's break down. If we look at the pattern I showed you, so we came up, all-time high, coming down, good support. Now we're in this lower high quadrant right here. So you see I was just consolidating. But it's also like in a bull flag too, off of this run up. It's still flagging. So bull flag still has a high probability it could break out of here. But we gotta watch for like a fake breakout. What if they just break it out of here, then it gets rejected, then boom, they slam it down. That could naturally happen. We will see, okay? And then let's go from the daily now, because it's 122, to the 4-hour. Look at the 4-hour candles. They are nasty. That's why they call it nasty NASDAQ. These are nasty on the 4-hour. Doing nothing. Look how long for the 4 hours it's been coiling up here. One fake breakdown came back up. We had one extension to come up, but they rejected it there. Another one, there's your double top on the 4 hours. There was your big redistribution, but it didn't kind of break the down in close below these bodies, came back up. These are 4-hour candles. This is 4 hours each candle. Like this tells you that NASDAQ is moving nowhere, just accumulating and waiting for the FOMC announcement. So even to look at this 4-hour candle, it's closing in 37 minutes right at FOMC. It opened, it was initially bullish, it went down bearish, created the lowest point of the day and coming right back up and holding right here. So even the 4-hour volume is nasty, okay? Let's see if we get anything on the 1 hour. So 1 hour showing a little bit more volume. We were flagging from 5 a.m., there's 6 a.m., 7 a.m., 8 a.m. Here's Wall Street, 9 a.m., coming back down 10 a.m. We made our lowest point of the day at 11 a.m. Big bullish engulfing candle coming right back up, pulled back just above 50% of it, the point of control, a little bit higher, a little bit lower. And it's failing on the hourly to break above 650, the daily point of interest. Now we have another selling candle. So just for like small time scalpers, cut that hourly bullish bar in half. Place a white line because it represents hourly. Okay. I cut it in half just by guessing, but I'll show you not by guessing. Grab your fib tool, open, closing balance. See, Ron hasn't smoked a joint today. So Ron is on point with his target right there, okay? And it's just kind of consolidating right in here, okay? So not much going on the hourly. When we look at the 5 minutes, yeah, there's a little bit of moves you could have scalped for, but just doesn't look that great right now. I can just base off of today's daily high. 5 minutes are making a lower high right there, a lower high right there. Volume is still below the daily point of interest, so we are pushing down. Like if you were to draw a trend line from today's high point, connecting it from point A to kind of point B right there, that wick, extending it, then you get it continuing. So you can see that the 5 minute trend line is still holding with a few impulse breaks. Okay, so I'm just going to make that red to represent the 5 minute trend line. And there's a little bit of bounce from the lowest point of the day, 11 a.m., but we're coming right back down. Okay, so I think it's going to consolidate in here, maybe tap the lowest point of the day, maybe come back up. But this is what we got to watch for. Okay, and our daily bars indecision with some bearish momentum coming down now. 9 and 200 EMA. Very similar areas, okay? So we will leave these two side by side. NASDAQ is right over here to the right. If you trade NASDAQ, focus on this chart. US 30, oh man, it's playing out perfectly, that M-top. Like this is what I was saying. I like to sell just kind of 20 minutes, 30 minutes before FOMC and just catch that leg. And I would be right now at a break even if I went in that. I would be up in profit right now. Like right there, if I took it, I would be up 40, 45, 50 pips. I would even scale out or close the trade. Like did you guys understand what I was saying walking into that? I was saying this is the point where they might sell it down going into FOMC so that maybe they can pick it back up and drive it, right? But I was just talking about it. I never executed the trade, so it's just talking points. I was doing NASDAQ, but if I was following US 30, knowing me, I guarantee you I would have sold that bar right there at 115. But it is just talking points, right? But do you guys see how I played that narrative in my head? Because that's how you got to trade, guys. You got to have some sort of narrative, right? And then if you see it playing out, go with it. Go with it. Go with your gut feeling. Just don't over leverage when you're trading. That's it. Guys, do you guys understand that? That's a solid sell setup. Like, get to know this pattern. This is pattern recognition. To put this in your playbook. Like, look at it. It was perfect. 5 minute top at the highest point of the day, and now they're dropping it down. Doesn't get any more technical than that. Okay, so gold is breaking down as well. Okay, so gold is breaking down. I'd like to see, are they going to close it all the way back below here? If it breaks, it might come right back up. What time is it? It's almost 1:30. Okay, guys. So we'll wait till like 1:35. Then I'm just going to go grab another drink. We're going to just come back, stretch, get ready for FOMC. Okay. Anybody have any questions regarding anything on our charts that we just did? All good, Justin? Guys, if you got something out of the analysis, like our stream on YouTube, subscribe to the channel. Let's see if we can hit 91,000 today. We're 40 subs away. And let's see if we can get there. Now our swing trading position, like this is on the 4 hour. So if we're watching gold like on the 4 hour, you see the buyers didn't do anything convincing up here. It's still below 50% of this big bearish candle, so it got rejected. Now we're coming down. So the job of this 4 hour candle is to continue to fill these wicks and break out of this green zone. So this is where we could see gold continuing to potentially push down. Okay, we've got 4 hour volume pushing down right now. Okay. So this is what we're seeing right now. But remember this big green zone, okay, because it could come down here and buyers buy it right back up. So we got to see, will the sellers be able to officially close it below these lows? Or is it just going to continue to just trade, go up, down, back up, down? Are we going to see a good move? I'll be doing all of them, Angelo. I'll be doing gold, like I'll be doing gold too. But then when I flip to US 30 and Nasdaq, I particularly like to trade US 30. But whatever setup is available, I'll trade whatever is available, right? Whatever one has cleaner volume. But I tend to trade more so US 30 myself personally. But whatever presents itself, we'll trade it. Okay, so now gold is coming right back up. So remember, this yellow line is a significant point of interest. It's a daily. So that 5-minute volume just conferred that it closed below there. So now it's coming right back up. So this is when you're looking for a retest opportunity. If it comes up, it will get a wick and go back down. If this blue candle comes back up and closes above here, then it could extend another bullish leg coming right back up, because then it came down and it's coming right back up. So right now it's just trading right below here. If I start, like doing my own analysis, like what I do on the 5 minutes, see it's making a little bit of support here, still kind of consolidating in here, so I'd like to see, will the buyers bring it back up, close it above here? Will it retest this to come back up? Or are we flagging now below here where it's just holding and it's going to continue dumping back down? Okay. And it's 1:30 now, so it's a new 30-minute candle in the market. My spreads are good, 0.4 right now. Okay, from that poll, 66 of you guys are bullish on gold, 34% of you guys are bearish. 317 votes. Wow. So 2/3 of you guys are bullish on gold. Okay, so then maybe this justifies maybe a little bit of a pullback coming down, leading into FOMC, and this will maybe launch gold to be bullish. And when we look at the indices, okay, so you see that sell coming down, so it came right back up. That's what I'm saying. If you get your 30, 40, 50 pips, pip and dip, pip and dip. That's it. Is anyone in a trade right now? I'd like to know for myself, is anyone in a trade right now on any one of these securities? No? If you are, just keep in mind 30 minutes is FOMC. So if you have any open positions, what is your plan going into FOMC? Are you holding them? Will you be closing them out? Will you be reducing your risk? All of these things. This is the time you need to determine these things. You got to have a little bit of a game plan now. Okay, because when you're walking into a high impact event like FOMC, you don't want to just be guessing, what do I do? What do I do? What do I do? You should have some sort of game plan. Which security will you be trading? What are you looking for? All of these things, okay? And it looks like gold is continuing to break down. There's a little, like you see a bear flag. It came up and then coming right back down, equal high wicks pushing down. So let's see if this black bar has its job to do to break this wick or even close below here, or will it just come up and continue to consolidate in here? Less than 2 minutes to go on this gold candle. Let's see what US 30 is and Nasdaq is doing. So it looks like they found their hourly support and holding. And we went over FOMC, so I hope everyone understands what it is, right? We went over it. We talked about it. We also have a blog on it if you kind of want to read a blog real quick. So this is all coming up very, very soon, okay? Our blog, what I was just talking about, is this one, Impact on Gold, NASDAQ, and US 30. This blog right here will give you a good little read and some tips from Chuck Norris over here on how to trade it. Okay, so it came down there, higher low, it's got a wick. Okay, so this candle, those sellers failed to do their job to create a new low, and now it's coming right back up. Okay, so that's what I mean, it's consolidating. And the volume, I don't think has closed below there. It might change in the next 40 seconds, but it's coming right back up. So there is some momentary short-term buyers inside this location here. But when the candle closes, that's when we determine everything. And DXY is really low right now. Like if you look at the daily candle on DXY, it's trading at the lowest point, and on the 5 minutes, kind of making a little bit of a double bottom. So will FOMC help pump the US dollar, or will it continue cause it to decline? Okay, so you see the volume now continue to just close inside here. So we might get some sideways action in here. And it's 135. Okay. Does anybody need a break or anything like that? If you got to go grab a drink, go to the washroom, go for a smoke, go grab something to eat, this would be the time to do it. Guys, we have 425 viewers and 180 likes. Let's step up the likes, guys. Got to get it above the golden zone. The point of control on likes is not happening. You're going to grab your coffee? Good. Going for a puff? Okay, okay. Make sure to pass it to us. Don't be one of those guys. Or have one rolled up for us. Justin, you got something on Discord? Oh, yeah, yeah. Oh, okay. I see it. Yeah. Up, down, liquidity, then bullish or down. Yeah. I see it. Yeah. Just follow, observe, see what happens there and see if it plays out. Okay, at 1:30, we had the White House senior advisor Hassett speaking. The Fed will probably need to do some more. A 25 basis cut would be a small step in the right direction. Powell has had a lot of negotiations to get the 25 basis points. Stronger data could support a 50 basis point cut. Wow, okay. If they announced a 50 basis point cut, that would be something spectacular. You could definitely get to 50 basis points or even more. Ford suppliers received China's new rare earth licenses. And the president will make the Fed chair choice in a week or two. Wow, okay. And it's potentially this guy who's speaking right here. This is Trump's puppet. Okay, so, and you can see US 30 is trying to come up at that hourly, back down. trying to come up, lower high, back down. So sellers could maybe potentially break this and drop it a little further. Nasdaq is still just holding this hourly level. Things are going to open up. Okay, so things are really going to open up as we get closer to 2 p.m. So I'm just continuing to observe right now. If you're in gold sells, there is a nice move coming down right now. So if you guys are in buys on gold, you got to be careful here. Okay, I don't know. We got to see if it's going to take out these lows or will it come right back up. So gold is making a move, guys. We sent out a gold signal for sell a little earlier, right over here. So if you guys are still in this signal, this is where you should be managing your risk, right over here. So the sell gold at 4,200 has hit 65 and 95 for right here. So the scalper at 4,200 dropping down 100 pips right now. Please, guys, manage your risk going into FOMC if you are in this trade. And there was another Discord added level right over here, okay? So if you're in this, please just monitor your risk, okay? And if you see where gold is kind of just stabilizing, where it found a little bit of support, it's right there. 50% of that bullish candle that started this entire run right there. The 1055 candle that engulfed right before 11 a.m. So it's holding momentarily support right now. It came up bullish again. They rejected it back down. It's this inverted hammer candle. So let's see if it holds this blue volume. If it breaks, the sellers are going to continue to extend it and potentially come down to the lowest point of the day today. And this is just 15-20 minutes prior to the FOMC. So for all of those gold buyers that wanted a discounted level, and you guys were 2/3 of you guys on YouTube were saying gold is going to be bullish, then there might be a nice opportunity to get some buys in there. However, if it holds up from this one, maybe that's where the support is now. Okay. And you see where that support is right as soon as you cut that significant bar right there that started this run. That was where now it pulled all the way back into, and right now it's showing some momentary support. And again, this is the 4-hour candle coming into like our swing trading zone. So it's still got a wick in there. So it's still holding. And it's still holding this point of control from Tuesday's body right over here. So gold is still inside here, but still very bearish. Here's a close in 1 minute. And then we have a new 15-minute candle opening at 145. So these are 15-minute bars that pushed all the way down here. Again, finding good support. So it's not just that there's a lot of 5-minute support at this area currently. We're still protecting the lowest point of the day. But we are in this trend coming down, descending on the 5 minutes. We are below the daily point of interest, and we're really close to the lowest point of the day, okay? Okay, so now if I kind of bring my consolidated zone, now we're in this location right now. Okay, it's still considered to be a bear flag. If we look, lower low, lower high, lower low, lower high, lower low, lower high, lower low. The bar opened bearish ignited. So you know that this is also a 15-minute bar that opened bearish ignited. So if it comes down, you can just kind of eyeball where 50% of it is, like right in here. So it was a shallow pullback, didn't come all the way inside here. So if it kind of it could fill this wick and continue to try impulsively extend out of here, and then they could push it right back down. Okay, so this is like one bottom on the 5 minutes that it's found some support here, and it's respecting the point of control of this candle at 1055 that started this massive run up. So it's still technically holding in here, but still inside here. Does this like where it is right now, does this change anyone's perspective on buying or for sellers? Does this do anything for you where we are right now? And we're about 13-14 minutes away from FOMC. We also have US 30 completing the move, closing below. So any blue move coming up could be retesting this and continue pushing down. So that second top, there it is, that beautiful M that dropped down. I like to sell that leg, but I came over when it was already completed. So, and then NASDAQ is just barcoding, blue, black, blue, okay? And guys, another thing to mention is also spreads, slippage too, if you are trading. So just please monitor that. Everyone is different. Everyone has a different situation. But one thing when you're trading high impact news, oh, Mr. Powell is calling again. Should we tell him to pump the markets? Powell keeps interrupting our live session, guys. Old man, you got to stop calling us. This is the calm before the storm. You're correct. This is what it is. Who's excited? Who's ready for the news? Exactly. And I hate to be the bad guy, you know, but You got to point the finger at the bad guy one time. There's going to be traders on this call that blow up their accounts. Okay? There is, right? I'm not blowing up my account. I can tell you guys that. I don't know about you guys, but that's up to you. How you approach this session and how you trade it, that's your business. I'm not here to kind of tell you what to do. But my days of full porting accounts are over. Those days are over. I'm trading with my proper risk management. I normally trade with 1% of my entire capital like each day, and I allocate a certain amount of trades to that. I've lowered it for this session to 0.5. 0.5. That's I'm cutting it in half. I'm cutting my normal sizing, my percent in half. Why? Because it's FOMC. That's the reason. Okay? If I still make good trades, I can still make some money, but if I lose, I'm only risking half because I know tomorrow could be a potentially better day in the markets. Okay? So that's just me. I'm telling you my plan. And that 0.5%, I can do it in 1 trade, 2 trades, 3 trades, 4 trades, or 5 trades. That's how I allocate it. Okay? You guys should be doing something very similar. And when I say 0.5%, someone's going to say 0.5. Holy shit. I'm full porting. I'm going half my entire account. If you are, great. Just be able to live with the consequences. That's it. I'm not a gambler. And guys, this is the time to clean up any silly mistakes. Check your lot sizing. Like if you were trading gold and now you want to trade NASDAQ, maybe your broker has different contract sizing, different size. Do those things right now. This is where you double check. You know, you don't want to make a mistake. I just read in the YouTube chat, someone made a big mistake. I don't even know if I can if I can scroll and find it. Oh, I think it was like I don't remember it. They lost a lot. Oh, I started day trading like 5 days ago with my savings. I had a thing open and forgot the stop loss, lost 1,900 euros. How the F am I going to recover? I have 700 left on my wallet. Is it possible? Like, first thing is, what are you doing? Like, you've been trading for 5 days and you're using your savings to trade and you forgot to use a stop loss. Like, what do you want me to say to you? Like, you want me to say you did a good job, let's continue to do that? Absolutely, that was stupidity on your part. You got to think. It's your first 5 days trading. Like, again, that's you got to overcome that. Now you lost it. It's gone. Okay? So that's your lesson. I know it cost you 1,900 euros. That's an expensive lesson. My God. So now you got to come up with a game plan. Take your time right now. I wouldn't be trading FOMC now. What I would be doing is taking a week off the markets, learning how to trade, and then how to recover that in the near future. I don't think you're going to recover it on today's call. But guys, that's a typical trader. What is out there? I'm not trying to be an asshole to him, but it happens. Like, that's how uneducated some traders are. And it's unfortunate. It's unfortunate. You know, I was in that situation too when I started trading. I know what it is. But what got me out of that was I stopped trading. I learned how to trade. I picked up a book. I read. There was no YouTube at that time. There was reading a book, looking at the charts. That's what you got to do. I know no one wants to hear it, but that's what you got to do. And then you're not going to recover that money tonight or tomorrow or next week. Maybe 1 month it takes you, 2 months, maybe even 6 months. But at least you recover it by learning what you did wrong. And then now you know how to trade. Now when you recover your money, now you can possibly make some money. But that's the way it goes, guys. Trading is tough. And then when you're trading reckless like that, what do you think the outcome is going to be? Am I planning on trading? Yes, I'm planning on trading, but I'm not going to trade on impulse. I know that there could be crazy candles for the first minute. I'm going to wait for the first 5 minutes from 2 to 2:05 for a closing body to see, is it whipsaw action? Is there a nice bullish, bearish candle I can find a point of control of? Things like that. And I'll see how it goes. And same with when Powell starts at 230, 230 to 235, unless there's a trend moving something. I don't know. I can't pre-plan what I'm going to do. All I'm telling you is I will be waiting for the first 5-minute candle to close across the board. And then I decide after that. And yes, I might miss out on a impulse move. That's fine with me. Because when you're trading the first minute, you got to have a plan too. What are you doing? If it goes up 50, 100 pips, what are you doing? Because it could come right back down in the next 10 seconds. If there's no trade, there's no trade too. That's the way how it goes. You guys do your own thing. You guys might be looking for something else that I'm not looking for. Okay. Just all I'm saying for everybody is please use risk management. Don't be gambling your savings. Okay. Don't be gambling. Like that should be number one. Check your spreads. Absolutely. Okay, guys. So NASDAQ, look at it. It's just coiled up. Blue, black, you know, indecision, barcoding, no real move. Even the daily candle's a nasty candle. The only thing that looks somewhat decent is US 30. There is a pattern we can recognize there. Gold. Okay, so we found a bottom. What if it comes back down for another, maybe a double bottom? Still in a descending triangle. Still, it's a nice bullish move coming up, but still could just come up and go right back down. And now we're 4 minutes away. Okay, so this is the time, guys. This is the time to not be playing games. This is the time to get serious. But I guarantee you someone's going to do something stupid on this call. It happens all the time. Someone is going to blow up their accounts. It's going to happen, you know. But there's nothing I can do. I've done my job to help tell people risk management. You're on your own now. I did my disclaimer. That's it. Okay, so JP Morgan now. The labor market has been mixed. Public credit market looks solid. JP Morgan is saying we see inflation coming down a bit. Not a believer. It's a 100% deal with Hassett. Wow. Okay, so it looks like Hassett will be our new FOMC chair. U.S. seizes an oil tanker off the coast of Venezuela. This is all in the news right now, dropping. Oh, I got a new mic, guys. I got a new mic. Thank you for you guys that are seeing that. I got the new mic set up. Sometimes when I talk away, when I'm talking to YouTube, I'm looking at a different monitor. So, but I got the mic close to me, so hopefully it's better. Your FOMO is so hard, you got to control it. You got to control it. Resist that urge. You're not missing out on anything. Why don't you just wait for pullbacks with the rest of us? Okay, so I will watch gold first, and then I'll flip to the indices, but I will be flip-flopping. Okay, guys? Normally we do it with 3 securities on the chart, but it is too busy. I wanted to see how this will work today, where we have NASDAQ over here on the right, US 30 over here on the left, and we have gold all by itself over here. So gold is making a move right now, okay, but it's still pushing down. It could just blow right through here, right? But it could also come back down and then go back up, but let's see, okay? And if you're on Forex Factory, 90 seconds, a minute and 17 seconds, they will be releasing, okay? And then it gets even more spicier at 2:30 when Powell comes to the podium with his purple tie. Okay, Okay, get ready, guys. Good luck to everyone. This session is going till 3 p.m. So for one more hour, we're here together. And then I got to bounce and I got to go grab my daughter in the snow. So good luck to everyone. And take it easy. This is the last FOMC of this year. And we may not see Powell again going forward. So, and then if you can, later this evening, listen to the conference. Listen for any forward guidance. Listen to what he's saying, because it could help us going into the end of the year, going into January and February of next year. Okay, and sometimes you see candles go right off the chart. There's been FOMCs where you see a big black candle just drop and it's gone, or it's a big blue candle and it just breaks right through here. That's normal. That happens. Hopefully you're on the right side of it. I'm not in a trade, so it doesn't bother me which direction it goes in. But good luck. Here we go. Okay, so it's just open bearish. Okay, flip bullish. Okay, let's just first see what is it, a rate cut. Okay, so very bullish candle on gold, breaking right through there. Okay, same with our indices. Okay, we got the rate cut, 3.75. Okay, that was the first 30 seconds. First 30 seconds. Very bullish out of the gate. Okay, how high will it go? Will we be able to cut this thing in half? Is it a solid blue candle? Okay, so all securities are bullish right now. They all love the rate cut. Gold and the market. So if you're in buys, great. If you were selling, you're in trouble. And the US dollar is continuing to push down. Check your spreads. A lot of you guys don't even look at it. My spread on gold right now was 3.5. Now we're up to 1.4. Now it's back to 0.8. My US 30 and NASDAQ spreads are always fixed. But holy shit, gold is really, spreads are, now they're cooling off to 0.6. So yeah, a lot of traders don't even look at the spreads, slippage, all of those things, okay, right out of the gate. Okay, so now what I'm looking for is, where will the bar close? We got to treat this just like any other 5-minute candle. Just because there's news and there's more volume, that's fine. But we can still do analysis off of it. Okay, so this was a big bullish candle, broke out. Still below there, getting rejected. Where will it close? There's structure right here. There's structure right here. Like, will we get the close above? Like, look at here. This is where those bodies stopped, right here and here. Now look at where the volume is, right here again at this level. Look at the daily candle. It's like it hasn't eaten anything today. Looks hungry. Very skinny. Looks malnourished candle here. Okay, and we can't get too much evidence out of today's daily candle. Just a good push up on the FOMC news. But remember, it was already baked in, 0.25%. Nothing crazy has just happened. Indices came up, broke the daily high, got rejected. Just below my hourly resistance on Dow Jones. NASDAQ did not penetrate to the daily high, got rejected. Okay, so closing balance. Now this is the first 2.5 minutes have expired. Now it's halftime. Now we get to the second half. Who will take over? Okay, so we got now big wicks. And if you were in buys, did you do anything? Those type of questions, okay? So now we got to watch and see where the close will be. Okay, so it was bullish right out of the gate due to that news, which was expected. Now the market is absorbing it and pushing the indices down, pushing gold down. Okay, if you measure that gold candle from open up there, that was a 180 pip candle. And if you didn't do anything, there goes everything down the drain. That's what I mean, guys. You got to have a plan. If I was in a buy, I definitely would have secured 80% left, 20% running, had a stop loss go to break even. I wouldn't be playing games with this. But I'm still waiting now for the closure. Okay, when we're talking about like a liquidity, like that was a big sweep up there. When we look at NASDAQ, okay, so what did US 30 do at the daily high? It looks like they've swept it out so far. Where will it close? What did NASDAQ do at this daily point of interest? They didn't take out the daily high, but it came very close. Big wick to recognize. Now we have less than 1 minute to go. Okay, 30 more seconds to go. Okay, so it's building back up. Will the volume close above the daily high purple line and continue to build to fill that wick and get out of there? Will it close above this red zone? If it does, technically I can go green. Big rejection on NASDAQ. Okay, I'll come back and I'll look at those. Let's just follow gold where it's going to close. Fed median core PCE projections at 3% in 25 to, okay. Guys, I have it on Bloomberg on one other screen. I'm just looking at what they're saying. Okay, so it did close. Technically, I'm going to get rid of this because it did close above that red line, okay? So now with that big body candle, let's quickly just do our point of control off of it, okay? Real quick. Where's 50% of it? Right there. 4,200 on the dot. If it comes back in, I'm just making a bullish point of control. It's still in that green zone, bigger green zone, still holding up. Okay, so it has not came back into this location as of yet, okay? It shallow pullback, still has volume, but it's got a big wick to fill, which could be done. It can be filled with news, has enough volume to do that. With US 30, we closed above that red zone, so it's green currently. So kind of this white line is cutting it right in half. Sorry, I didn't want to move that. The white line is kind of the cut line right there. And NASDAQ failed right now up here. So again, I'm just waiting. This is now another 5-minute candle. Not seeing anything. Maybe I'd like to wait for a pullback on gold down into here and then maybe buy out of there. Okay, but you know you got to patiently wait for it. Right now is that FOMO. It's gonna if I don't buy now, it's gonna keep going. But there could be pending orders situating themselves inside here currently as we're speaking and as we're waiting. So if you want to buy now, go ahead, try it out, but just use proper risk management while doing it. Okay. So I'm just going to get rid of this eclipse here. It kind of. So now NASDAQ and US 30 are back filling their wick. Can they break it for a new high? Okay, so still bullish. Gold is still running up. But let's see if it gets up to the red zone. We know that this is higher time frame sellers. And we know that that's the hourly resistance, 4,220. Okay. As anyone in a current trade. Now our 4-hour bars on gold, look at how it retained that position. Wick in there, wick in there, wick in there, and this one got a wick. They released the news, very powerful. So 4 hours strong on gold. So let's see if it starts to drive into this red zone up here, okay? It's very strong on the 4-hour as well. So, but it's basically just the last, 7 minutes. It's all FOMC volume. And the US dollar is continuing to push down. Someone got cooked on the call? Who got cooked? Hopefully no one got cooked. You guys are in a gold buy. Good. As long as you're like, if you're in buys on any of these securities, you're doing well. Okay. Just manage it. Good for you guys that took buys. Chef mode, Sherry. Good for you guys. Awesome. Again, I don't want to buy the highest points. It looks like I missed an opportunity. So I got to wait patiently for a pullback. If the pullback comes, it comes. If it doesn't, again, this is how you got to control fear, FOMO. If you can't control it, then I can tell that you're lacking a little bit of patience. And it's driving. That's a critical white line. Remember from our top down, the 5-minute candles have struggled to break up here and there in the past. But with this type of volume, it could definitely break and create that new high. Remember, the 4-hour candle is coming behind with some strong volume. That is testing the 4-hour resistance right now, which could continue to break this. So still very strong on the US dollar, or sorry, on gold. US dollar is sinking right now. But now NASDAQ has an opportunity to do something at the daily high as well. Again, follow your bars. Okay, so opening ignited, continuing that continuation off of that big bullish candle. Okay, any pullbacks and back down into here could be good buys. Any pullbacks down into here could be good buys on NASDAQ. But right now, NASDAQ is trading at the highest point of the day. US 30 is trading at the hourly, that white line right up there. And gold now almost reached that hourly white line, just a little bit above, a little bit below, and has one position coming down. If we're to cut this blue candle, let's see if it finds a little bit of support here at 42.11, maybe consolidate here, maybe bounce off this, continue to drive up, or will it start to come down and sell off? I'm going to get rid of this big green box. I don't want it to confuse anyone. I want to kind of watch more this zone. This was the FOMC zone. But still holding. So let's see if any tops are created up here. The US dollar is still very bearish, so this could continue to drive these securities even higher. So if you're in buys, things are still holding up. NASDAQ and US 30 are still holding. Still holding, even if you cut those bars in half, still technically holding up. Now we're kind of advanced right into that hourly level. So let's see now. Now we should see some transactions occurring up here. The daily candle has flipped into a bullish pin bar, and it's very, very strong. And there hasn't been like a nice clean opportunity for a pullback. Okay, now US 30 got rejected. Again, NASDAQ didn't have enough juice to break that daily high up there, and now it's coming down to potentially test into 50% of that bar right there. Okay, or will it flag up here? Will it come down? If we're looking for pullback buys, it could come all the way back down into here. We'll see. Okay. Okay, so you see at that hourly white line, you took your profit on gold up there, Sherry. Excellent, excellent. Like right there, 4,220. We marked it up. That's a great location to realize some profit. Okay, because there's going to be some sellers there. You can clearly see now they're there. That's an excellent trade. If you were in the buys, you secured up there. Maybe you controlled your risk by going to a break even. Maybe you didn't close the entire trade, but you took out a partial position in profit. That's fantastic. There's nothing else you can do. That's managing your risk while trading FOMC. It's not easy to trade FOMC, but if you get in a profitable trade, you got to manage it, right? Chef, wow, you're done for the day, 2% target reached. Excellent. Now just be done for the day and your work is done. That's it. Excellent. Trading upwards, your goal for 2026 is no blowing accounts. God bless. Hopefully everyone has that goal. That's a great goal to have. Okay, we've got a SST sell setup looking around 42.10. down in here. So we got that bearish candle. Let's see if it can close below there, but we'll monitor this area, give or take, 42.10, 12.08 with the type of volume. Maybe we can get one leg coming back down. Okay, and this candle is closing in 50 seconds. It's bearish, breaking through there. Okay. See, Sherry, that's an excellent profit take up there. No woulda, shoulda, couldas, just trading, boom, right up there. Excellent. I love it, guys. Okay, so look, it came down there, got a wick. Where will it close? Okay, you see how it's trading like at the point of control of that big bullish candle. I take base hits, Sherry, same with me. Singles, doubles, triples. Once in a while, you're going to hit it out of the park. You're going to get a grand slam, but you win baseball games with singles, doubles, and keep cashing in. That's a great way to look at trading. Okay, so close back in here, bullish ignited. So let's see if they can continue to push this thing down. It is bullish ignited. So will it come all the way back up in here? Will it get a quick wick and push it down? Then we've lost that ignited open. Then maybe it will come back and backfill this wick and keep coming down. We didn't get that black volume close below here, and it's still holding bullish right here. Okay, so now we got to kind of monitor this. Will it be barcoding inside here? Will it continue to be a bull flag and continue to advance out of here? So we did not get down to the 42.10 yet. Close, but not there. And now US 30 is kind of barcoding in this area here. So market is consolidating now, okay? That was the first 15 minutes they announced the news. Now it's the second half, 15 minutes to go right into Powell, okay? And it's still bull flag. Bull flags have a high probability of continuing to break to the upside, okay, and can continue to move through here. And then if you kind of want to justify yourself taking an impulse trade on that, then your job is to fill those equal high wicks and start driving to that daily point of interest, 47,950, and start transacting in the bigger upper red zone. And then gold is still inside here. So it kind of transacted right to these bodies right here, this point of interest, 42.16, still holding inside here. NASDAQ and US 30 still strong. Remember that 42.20 is a serious area, right? From the higher time frames. We have now second half of this candle to come in, 2 more minutes and 40 seconds. So it came, and remember, it's still bullish ignited, came up, but they've rejected it so that we got some sellers up here and they're pushing it down, but we're an inverted hammer. Okay, so it's a still strong bar. It's still holding that opening balance, and it could be refueling itself to continue to come back up, which it is doing. And NASDAQ and US 30 are still building to continue to break through here. You might want to wait for a bar to close for confirmation, or you can enter now and then see what happens in the next 2 minutes. I'm waiting it out, trying to be patient on this call. Okay, so how many times has it came up there and they pushed it down? You know, the same principles we learn on every single day call, still doing the same thing during FOMC. Okay, now we got 90 seconds to go on the close. The bar is still an inverted hammer, still has that bullish open. We got sellers up there coming down. It keeps refueling itself 3-4 times now, keep coming down. Will we lose this opening balance and start to transact down in here? And then maybe we could look for that sell. We got an SST signal at 42.10, and maybe to take it down into this green zone, and then we have to do something down there because those could be those patient buyers waiting to buy gold out of the FOMC gate. Okay, so here's 60 seconds. It's almost thinned out. But it's still technically holding. US 30 got rejected, and NASDAQ also got rejected there, okay? And we got 30 seconds going to close. So I always physically watch the 30 seconds going into the close. Will they break this? Will it come down? Will it go up? All of these things, okay? And we're still basically at 50% of that big bullish candle still holding. And 10 more seconds go into this close. So with this volume that's still holding bullish, it could open still bullish next candle and still try and drive up this wick. Or, okay, so open bearish. Okay, get ready. So this could be a bearish ignited break, or will it catch a quick wick? Okay, caught a quick wick. Will it lose its opening bearish body? You got to really, really pay attention. Okay, so it lost it, turned blue, but it's still bearish, holding below. Okay, it's still bearish. Turned back blue. Again, can you even see the candle? It's so tiny, like it's so thin right now. But it's just hanging around here. It's one of those doji candles that's slowly kind of just consolidating. It is bullish coming back up. So will we see any lower high retest to push this thing right back down? Right now it's still holding bullish. So this could be that leg that came up, leg that came down. Could be the other leg that's coming up and looking for that double top drop. Okay, we're trading at 42.13. Still holding. Wow, look at this candle, how tiny it is. Okay, so that's a good push. That was a good order, like a good offer by the sellers up there. See how they just kind of penetrated it down. Okay, I'm going to sell it, okay? I'm going to go into sell, and I'm going to see if I can come back down to this red line to kind of engulf this blue candle behind, and to see if I can transact back into that green zone. Stop loss placement above these previous highs right here, above this hourly line, and above these wicks, above the 42.20. So I'm going to see, if we can sell this leg down and then manage my trade down here, because maybe I change the sell to the buyers down here. But if it holds up, I don't want it to break out, continue to be bullish. So that's my maximum risk right above these wicks and above there. It's a tiny doji candle, just kind of just trading inside here. So we'll see what happens here, okay? So when I measure the move from this red tape from entry to the next red tape, it's about 60 pips. That's where I could definitely control my risk down in there if it starts moving down there. Ultimate, if it gets down there, would be 100 plus pips down to target down there, okay? And then I got to follow this volume and follow it into the close. Also just continue to manually watch it while it's developing. Okay, and then US 30 still in the box with NASDAQ still in the box here. Okay, so the job of this candle is to break that wick, break that low down in there. Okay, it's good volume. Okay, to break that candle is 30 plus pips. Okay, good break. There's 30 plus. Okay, but if we get down to that red line, it's 60 pips down in there. And then that's where we got to be careful because there's a body that closed there right at 2, and 205 was a transitional candle right there. Okay, this is where you can reduce your risk if you like. Okay, it's 40 pips down to there, 40, right? Okay, but it's finding that support down there. So there's those buyers bringing it back up. Now we got to see if this bearish volume can continue to hold and continue to offer down this wick going into the close in the 90 seconds. We still don't have one black bar that's closed below here. Is this going to be the first one, or is this one going to fail to close below here? And we got, yep, Powell coming up in 7 minutes. Yeah, so that's why we got to also look to control risk, guys. US 30 NASDAQ. Okay, they're moving down too. Wait for a bar to close. I got to follow this gold, guys. I got to stay with this for a moment. Okay, because we're coming right back down to our wick. Can we continue to push down our wick and get down there, kind of flood it down? Your 9 EMA, for you guys that follow that 9 EMA indicator is right there at that red line to that location where I'm looking for that 60, 65 pips down in there. Okay, we're dropping down. I'm reducing my risk now. So my risk, you see, guys, completely reduced in half, my risk. Okay, I haven't taken out anything. Wait till target. There, boom. I'm taking out 80% right there at 65 pips and leaving 20% break even. Just trade that bar. And then we'll cut this one in half and see if we get some continuation. But guys, I got to do this fast. That's fast. 80% out at the 65 pips and 20% is at break even. Zero risk, zero drawdown, nothing. 1 bar. That's it. Now let's cut this shit in half. Bring this cut line right there. Okay. And let's see if we can continue to move down with this volume. Okay, there's the cut. So I just cut it in half. We have a small doji candle doing its job down here, holding it down, holding it down. Let's see if it can continue to fill that wick and break down to the green zone. Then if it gets down to green zone, I'm closing complete trade down in there because I'm respecting those buyers that have been waiting since FOMC. Okay, but worst case scenario is blue coming right back up. And then the only 20% I have invested is at break even. That's it. I'm okay with that. Psychologically, emotionally, I'm good. As long as I have no capital at risk and I've already cashed out. So guys, we had that signal from SST at 42.10, give or take around there. Good signal provided. Right over here, guys. And then I just kind of played it out live for you guys, okay? So now we're just kind of consolidating right in here. It came up. We're still below 50%. Let's see, just one more push out maybe before Powell comes, or maybe Powell will fart at the conference and gold will just dump if we're still in it. But please, guys, manage your risk, okay? Drop a like in the chat, guys. You know, it does help out the channel a lot. Thank you guys so much. We have over 600 viewers. Thank you, guys. Do appreciate you guys. And hit the subscribe button if you guys can as well. Good job, Cher. You cashed out on gold. You met your goal today. Excellent. Excellent. Okay, so we got a lower high. We're still below the point of control. Let's just, come on, bid down this wick. Get it, start bidding at 42.05, and maybe we can have clearance to get down to our proper zone down there. Yeah, guys, we work as a team. I'm live right now. Dave is behind the scenes. You know, the snipers are in the Discord. This is how we do things around here. Sometimes when Dave is live, I'm behind the scenes. You know, we do these things. We work as a team. And now we got Powell coming up in 90 seconds. Like, this is where I just want that flush, get my money, get out, and see how well Powell is, how good he looks today. Purple tie. Okay, sorry I haven't been concentrating too much on the indices. They had that big pump. Now they're retracing all the way back down. So you might get your opportunity to buy a dip if you're waiting patiently. However, Powell could change things. He could change things. Okay, I got to follow this gold trade. When we're in a trade on during FOMC, got to kind of follow this. We got now our shooting star candle. 2 more minutes to go. Its job is to fill this wick and drop. There we go. So it broke. It did its job. Okay, that was the job of this candle. Now we're pushing down. There, 70, 80 pips. Perfect. Do what you guys got. Oh, there it is. I'm closing out 80. I'm closing out right there. We got it. Bang. 4,200 on the dot. I even got slipped on the downside. Oh, this shit is dropping, guys. Wow. Runners. Oh, how many times do you guys get slipped to the advantage when you're in a trade? When you're looking cash out, you get slipped and filled on the way down. Wow. Okay, if you that's 160 pips. Perfect, guys. That trade had zero drawdown. Wow. Shout outs to Big Dave and the signals behind. Fuck yeah. Yes. That's a solid drop. Good job, guys. So you see, guys, that why a top-down analysis is so proper to do. 42.20, you know, when you're in buys like Sherry was, she cashed out up there. She respected that area. And if you didn't, look at all these gold buyers from FOMC. It came all the way back to entry point. You know what I mean? And they just pissed all that away. And we just caught that second leg down. So now we know where the bigger neckline is. It's right here and there. So, guys, congrats. Perfect. Hit the likes, subscribe to this channel. Come on. Oh, come on. I'm not going to go to the charts until one person subscribes right here. It's at 999. No way. Come on. Someone just hit that subscribe button. I swear I will not go to the charts. There's 600 viewers and not one of you guys. Are you guys playing games? Because I'll shut this shit off. don't do this to me. There we go. Thank you, guys. 600 people, not one of you guys can subscribe. Are you kidding me right now? Okay, here we go. This is now Powell coming to the conference. Okay, so it just came down there. I'm out of this trade. Okay, so I'm out of it. You know, I'm out. So this trade is closed. Okay, now we gotta see what's going on now, because it could be now, is the market going to come right back, rotate back up, or is it going to continue to bleed back down? Okay, now, okay, I know I'm talking fast, but there's a lot to go over. If you just took a couple successful trades, now it's the second half. This is where Powell comes out, gives his economic projections, talks. Are you going to risk everything that you just made, maybe the first 30 minutes of FOMC, and gamble it now with Powell? Think of something. Have a plan right now. Like, I took that trade, I made some money. How much of this am I going to allocate to my next trade? Okay, I'm talking fast, guys, but I got to talk, you know, some sense into some of us. But that's how you got to go about trading. How much now are you allocating to your next trade? And if you're in the profit, do you want to bet it all, or, you know, what is your plan? Oh my God. Okay. So the US dollar is moving. Okay. So we got to watch maybe pullbacks on NASDAQ, and maybe US 30 could continue to move out of here. And gold is pushing down where? To the bottom of that red line. Okay. Remember our daily low? It's all the way down there. We have not tapped into it yet. And if you came all the way down there in the sell, that was like complete distance. That's 190, 200 pips down there. Okay, now we got a big wick and coming right back up. So will this now close above here and have another bullish leg coming back up? Powell said, good afternoon. Yeah. Okay, well, we can wait for this candle. Just like our first 5-minute rule, what we did when FOMC opened, we can do 5-minute rule for Powell. You don't got to jump in right away, okay? We can wait and see what's going on. Chef, you cashed out again? Oh, Chef, you're cooking today, brother. You are literally cooking today. And I love the name Chef. What better name to have when you're cooking? You're the chef. Guys, I want to give, because normally we talk about traders that are, you know, doing some silly mistakes and things like that, but I really want to give flowers, the respect to the traders following their management, following their charting, working hard. You guys get your respect as well. You make our lives so much easier here at SST. Thank you, guys. And I hope you guys are honestly recovering your losses or what you learned in the past and now starting to become a better trader, one day at a time, one candle at a time. If you're starting to see your account compounding and you're seeing results and you're doing good things, I'm telling you, stay on that path. It will get better and better and better for you. Just stay focused and stay disciplined. That's it. And a new year is coming where we're going to change a lot of lives here. We've already done enough where we can pack it up here at SST. We've helped a lot of people, but we're not ready. We're continue ready to help others. So, but you got to be on the same page as us. We don't gamble. We don't do high risk trading. We learn. We're disciplined traders. We learn on a daily basis. We work hard together. Okay. We're not gambling on these calls. Dave is working hard. I'm working hard. The SST snipers are working hard every single day, as you guys should be too. I know a lot of you guys are working hard on Discord, on YouTube as well with us. But trading is a tough thing to do, but patience and discipline. For example, we took that sell. If you wanted, that FOMO buy, if you missed it, where are you, did you not buy here or buy there? If you bought that pullback, you're in the money now. Just like that, with minimal drawdown, depending where you bought in. But if you waited, look at that green block, it's still holding up. Now look at the move. So if you didn't do anything on that, look at the whole trade comes back to break even. Now look at how the market, Powell is dumping the US dollar and gold is continuing to break, and our indices, flagged. Did it not just come right back into that location? I know I wasn't following US 30, guys, because we were in the gold sell, but look at right there. It's like clockwork. It came right down at 25 and then Powell right there. Look at where it clocked right into. That was the FOMC candle cut in half. Did anyone buy US 30 right there? Because if you did, you make my job so much easier. We identified that for you guys. If you just waited for it, there it is. If you missed it, you waited 30 minutes, you patients got paid and you're in the money. That's it, guys. Just locate these zones and wait. I didn't have an alert in there. If I was alerted, I probably would have took it, but we were in that gold sell at that time. Maybe next time I got to put 3 charts on these meetings. Well, let me ask you guys, do you guys like this, how I'm flip-flopping from gold to the indices back and forth? Or did you like when we originally did it with all three charts on one screen? I can get rid of financial juice and I can open up the charts and I can put all 3 for next time. I need your feedback. Do you guys remember when I used to do 3? Patrick, you remember that? Was it busy for you guys or it was all good? I thought it would be busy. Okay, next one, guys, I'm going to put all 3 charts and then I can follow everything without flip-flopping. Because if I was on this, I guarantee you, knowing me, I potentially would have bought Powell coming out of this if I saw that. I know it's hypothetical, but I know the way how I trade and I know what I look for. Okay, guys, so man, hopefully it's been a good session for most of you guys. Now, you can just kind of end it as a good session, or we can continue to trade. Look at now it's getting volatile. I have no idea what Powell is saying, but holy shit, the candles are dancing right now. Okay, so this is too much volatility. Black, blue, black. Okay, so I'm going to wait it out now. I'm just going to get rid of this trade. It's done. I don't want anyone to think I'm still in a trade. I'm going to clean up my charts now, just tidy up. Okay, and we got to seriously watch now. Now we got big volume. Now Powell's talking, okay? So I don't like this barcoding shit. Black, blue, black. And now we see a pattern. One top, consolidation right here. Came back up right there. Are we following this down? If we break that daily low, gold could flood down, okay? And US 30 dropped into here. Same with NASDAQ. NASDAQ finally took out the highest point of the day, okay? So we got to watch. Maybe NASDAQ did the liquidity grab at the highest point of the day and ready to maybe continue to push down, but I'll wait for that volume to close. Wow, now we got some serious volume now in the markets. Serious volatility. Now lots of indecision going on. Oh my God, Philip, I'm just reading what you're saying. Guys, I almost recovered my 70% loss within the year. Oh my God. I'm going to say good job, but how the hell did you recover 70% from what you lost within the year? Holy. Did you go full port? If you did, hey, if it's part of your plan, I guess you got to do what you got to do, right? Sometimes you just got to do what you got to do. Throw everything out the window. Rich, I make trading look very easy. I'm not making it look easy. I'm just patient. I'm just being disciplined. That's it. Maybe that's why trading looks easy with us. Maybe it's just because we're more patient. Maybe we're more disciplined. Maybe we know what to look for. That's it. I'm not a better trader than you. I'm just maybe more patient than you. That's it, guys. That's it. There's no secret to this. I told you guys this yesterday. Patient, get paid. Impatient, likely lose, right? And then I don't like this volume now. The way how it's just going up, down, still inside here. That's, again, I'm being patient. Maybe there's a lot of traders that are trading this. I choose not to. I'm going to wait for a better setup because I know that is just consolidating in here. I know that gold is not just going to stay in here all day. It will maybe attempt to break out if buyers accumulate more. That's what I'm watching. Or it might sell the lowest point of the day and drop if sellers are accumulating more. Thank you, Christoph. I appreciate you. I like that comment. I will read Christoph's comment too, because I read a lot of on the YouTube, but Christoph is in Zoom. He goes, us, SST, all of SST, everyone here is great, simple, humble, fun, great teachers and mentors. So grateful for SST. Christoph, I'm grateful for you. I'm grateful for having you in this group. You know what I mean? I'm grateful for having you guys that are really taking trading serious and learning and doing good things in a fun way. Trading can be very, 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 demanding. It can be very scary. It can be very tough, can be intimidating, overwhelming, but just take your time with this. It's not that hard. This is FOMC, right? Normally, this is a very, very, very tough session to scalp. We're scalping literally. But if you just wait it out, now we look back on gold, it's still just stuck inside here. Now it's got an attempt to break down, but this could be that impulse break. Is this the time to take it? Maybe, but you see how it got that wick and came down? Now will it come down with that extended volume? No. Or see how it's got a wick there? This candle just opened 4.5 minutes ago, so it's got a lot of time. Now you got to see, now it's coming back down, okay? So this one could literally bleed out. Okay, do you want to take an impulse on this? You got to ask yourself, there's the break, come back up one more time. There's the break. Oh man, I'm itching to take this thing on a sell. See, I missed it right there. To me, I missed it. Now I got to wait for it to come back up one more time and sellers to reload it down. But by the time I'm waiting for that, this thing can start breaking for the lowest point of the day. I missed it. You see what I mean? I know how to take like impulse candles, but you got to time them perfectly. And I missed that one. The way how it came up and broke, I knew that yes, I missed that. See, that was a good opportunity to take an impulse break. I don't know how to explain it. It's so fast. And I missed it. I know that I missed it. Now I know if I go in now, I'm going in at the worst time. You got to know it's intuition. It's hard to teach this. This just comes with watching candlesticks. And someone's going to say, well, Ron, why didn't you take it? I'm telling you, I missed my opportunity. I was humming and hawing and talking too much here. I should have just taken it. And I missed it. So I know I missed the trade. And now I don't want to sell the lowest point because I know I could have sold it right there. And I screwed up. So now I got to sit back and wait for it to close now. Do you guys understand? Like, I don't know. It's fast. It's live. I don't know how to break that down. But as soon as that candle was coming up, it got rejected. And then when it broke down, it got that wick coming back up. And then I said, guys, it was 4.5 minutes to go. It had a lot of time to continue to reload up here. And it did. Then it came back down and it came up. Then I wanted it and I got too cute and I waited and then it started breaking down. And that was exactly what you look on an impulse trade. But now that it's gone, I got to remain disciplined. What do I got to do? I got to wait for it to close. Will it close below the lowest point of the day? Will it get a wick, come back up? If it closes, I can go this green zone, make red zone, and I can wait for it to come back up, and maybe I can sell the retest. I'm not the only one that just missed an impulse move. Maybe there was a lot of traders, but this is the confirming candle, and then we can wait for a pullback and maybe sell back in here again. Okay, I'm just talking about when you're humming and hawing about taking an impulse trade, which ones are the ones to take? That's what I'm trying to explain here, and I'm explaining it live. But it comes with intuition. You got to know exactly what you're looking for. You had to have seen this move multiple times in the past, right? Don't worry, we'll teach more on that. I know it's very, very, very fast. And then look at now, okay? So now it came up, back down, took out. Okay, now we've got a pattern that we do recognize here. That now took out the daily high and it came right back down to the hourly white line neckline and coming right back up. So this could be the M pattern that NASDAQ wants to maybe continue to sell down to the lowest point of the day and break as well. So we got to watch this as NASDAQ is building here too now. One more minute to go into the close. Yeah, Lufeth, you caught 220 pips on the M1. Yeah, they are big moves, guys. They're big moves. You know, they're big moves. Powell is pumping the shit out of the US dollar. GDP growth upgrade partly reflects data center spending. Powell is talking on Bloomberg right now. He's got a purple tie, looking good. He looks stressed out, poor guy. He's probably under a lot of heat. Like, you got to understand, the gentleman is old. He's old enough to be our grandfather. And look at the shit he's got to deal with. Like, all of the pressure of Donald Trump and his cabinet. And I feel bad for the guy. You know, Powell's helped us out, you know, by printing a lot of money in the markets and things like that. But he is an old man. Who knows what type of stress he's going through. Yeah. Poor guy. Okay, here's the close. So let's see. Where is it closing? Okay, so it did close below the lowest point of the day. I'm cutting it in half. Cut half is, you know, where it was support, now resistance. Will it come back up and continue to push down? This is where maybe we can continue to sell it down, or we have to wait for the pullback in the red zone. And there's where you have your 9 EMA and your 200, you know, crossing down. So if we get a big blue candle coming in there, it could be a good opportunity to sell back at 4,200. But it might not come back in there. It might just, you know, hover right around here and continue pushing down. So we got to either wait for it and see what's happening. Now it's coming back up bullish. Will it come to this red line that I have located or right into that red zone? NASDAQ barcoding, okay? Bullish, bearish, bullish. So I don't like this. Consolidate all this trap zone. You know, you can consolidate all of US 30 up here and just continue waiting it out. Higher time frames for a sec on gold. Yeah, I have it on the 4-hour chart. So you see, remember this? Now look at where it came into, and now it's pushing down. So we could see gold continuing. This is a 4-hour chart. This is our swing trading chart. I remember I told you guys, FOMC is really going to shake it up. So it came, look at it, liquidated all of these orders up here, and now they're pushing it down. Okay. And this 4-hour candle, guys, watch it going into the close. It's closing in 2 more hours. If we're trading, you know, our third swing trading session tonight, we could maybe be looking for selling on gold to continue to come down if this 4-hour candle cooperates and continues to drive through this green zone and close below here, because buyers could be buying it back up and close it back above here. And then we have, again, spin top coming out of FOMC. So there's still some indecision on that 4-hour. And now we're coming right back up. So it's holding this daily low. Now we're coming back up. So let's see the actual retest of the zone. Remember, I was talking about that impulse trade. Okay, now it's coming maybe possibly up to retest this location. But right now you see the red line is being respected, not this zone. Okay, so that's the point of control of that candle. And now they might flip it and continue taking this thing down with 3 minutes to go. So you see how it came in there, retested. As it came down, it did not break black to continue to fill that wick and drop down. It got another reloaded refuel of blue bullish volume coming back up with buyers asking to continue to trade up here. So you gotta kind of continue to follow this candle. And US 30 is holding, and NASDAQ looks like they want to break out for new highs up here. Okay, so keep watching. Like, how many times has it retested this red line, getting rejected? Now it could maybe potentially start breaking down with 2 minutes to go in it. It's already retested the point of control, not the zone, but the point of control has been tested. Now we just got to kind of see if the candle will flip and continue pushing to the downside, to that hourly white line and maybe even further down. Okay, but it's still building in here. And guys, I have about 10, 15 more minutes maximum on this call. Then I got to take off. I got to clean the car, all the snow, and I got to go out there and get my daughter. But I feel like we had a good session on FOMC. Thanks to all of you guys that joined, liked, subscribed. Don't forget, we're coming back at 6:30 tonight for our last swing trading session for the week. And tomorrow morning, Dave is live New York, 8 a.m. And then I'm post 11 a.m. tomorrow, okay? And then maybe we'll see some clean volume trading tomorrow, post FOMC. and maybe we might have another good day in the markets. Okay, so now we have about 1 more minute to go. It's retested, coming down, back down in here, but still holding blue volume. Okay, so maybe this is like an inside bar, and the next one might be bearish and continue the drop down, depending on where and how this thing closes. Chef, I would love to stay longer, but I have a daughter. I got to go get to school. As much as I love you guys, I love my I love my kids too. I don't want to leave my 9-year-old stranded at school. One time I actually forgot. I had to pick her up. I got so into it with the call with you guys, and one of you guys reminded me, you're like, Ron, do you not have kids to go grab? I'm like, oh shit. I completely forgot. Sometimes I get caught up in these calls with you guys too. But you guys always got to remind me that I have kids. Okay, so it's still now coming up bullish going into the close. So we might have one more bullish extension that could drive on the next bar, depending where this one closes. Okay, US 30 and NASDAQ still building near the high points. Okay, and then this is where you could potentially consolidate right now. See how I box it in? Is this going to be a bear flag right there now? Will it continue to be like a Tetris piece, continuing to break down? That's what I'm watching for. And in this one, I might have to go with it if it is coming down. It's bearish, coming down. Coming down, will it start to break here? Okay, as soon as it breaks, I might go in. No, it came down, got a wick, going back up. So I got to respect the buyers are still holding it here. But let's see if now sellers can slam it back down at the opening balance. Or will it get retested in the red zone? That's a better premium area to sell up in there. Okay, we're still in this bear flag currently. It's flirting with the lowest point of the day here. So will the sellers bring it back down? And we're 10 minutes away from power hour 2. So then we have a new hourly candle coming in the market. That's going to officially close the stock markets from 3 to 4 p.m. So more so if you're trading NASDAQ and US 30, you have to consider the last hour of the day. Okay, maybe we buy this to cut through. Okay, so now it's bullish. Let's see if there's a pullback coming down. Okay, so no pullback yet. Now it's transacting into the official red zone where started that move. Okay, so there is a small wick in there. Now we got to see, will those sellers officially be there to push this thing down? Or is gold, it's back at its opening balance of the day. Okay, so this is where the war is. This is where the tug of war will be from the buyers and sellers today. It's right near that 4,200, 4,197. This is today's opening balance. So this could technically continue to move up bullish, or are the sellers going to be here to cool this thing down? Okay, I'll get rid of this because now it didn't break down. Okay, I'll get rid of that cut line because we've got to focus more on this red zone and more like the daily low down in here. Okay, so I'm still waiting for something to happen. US 30 and NASDAQ look like they want to officially continue to break out. Okay, so if you're in they're continuing to ascend. Nothing really broke down. They're still bullish, could continue to drive with the rate cut. It's good for the stock markets, right? So US 30 and NASDAQ are still bullish. If you're looking to sell, nothing really broke down there. It was coming down. I was watching that to see if there was going to be any black volume close below there to take out the lowest point of the day, but it's still holding, still good. Okay, Powell says, don't think a rate hike is anyone's base case next move. So he's kind of hinting that they're not going to hike in the new year, but potentially pause. That's what he's hinting, not really rate cuts. That's coming from his camp. And guys, if you're going to continue trading in power hour, if volume closes above, it's still bullish trend, look to buy pullbacks. If volume closes above the daily high on NASDAQ, you know you have a new daily candle closing above a daily high or pushing above its daily high, and then look to buy pullbacks situated at these areas, right? And then when the volume comes down, maybe buy the pullbacks. Okay, so gold broke that lowest point of the day and stepping right back up. So when you look at the overall thing, look at the 4-hour candle now. So it broke down That was when it broke. We just watched it. This is when it opened FOMC. And look at the volume. Continuing just to consolidate, the opening balance of the daily candle. So it's still got a lot of indecision. So it's hard to say. Gold could definitely continue to go up. It could definitely come back down. So this is that mixed reaction. If you're watching on the 5 minutes, it could just come right back in here and go back down and go back up. Now our zones that we're trading, I would be focusing like up here, that, and down over here. Those would be what I would be focusing on if I was going to continue to scalp gold the rest of the day. Would be watching. I would even get rid of this and just focus on this as a red zone within the red zone, just how it shaped up from FOMC, and this to be a green zone right now. So now you can see how we're bouncing on the 5 minutes. There was FOMC, big move, came back down. We had that sell, and then it came all the way in here, back up, then it sold all the way back down. I missed out on that impulse move. I wanted it, and then now it's holding back up, coming back up. So it's still just kind of concentrated right in here, and the daily candle is just lots of indecision. But NASDAQ and US 30 moving properly, just higher highs, pull back properly right into there, that point of control of the 2 p.m. candle. Then it broke out for a new high, came back down, tested, good wick, continuing to break out. So even pullbacks, even that back down to this yellow line would be a nice pullback area to buy. At the daily point of interest, 47,950, the 90 EMA is there, and that would be a good buying opportunity for NASDAQ. Anything pulling back to here, 25,720, retesting daily highest support would be a potential area, but deeper down into here at this yellow line, 650 would be a better opportunity if you're going to continue to trade. Emmanuel, you took your $200 to the casino and you're up $53. The casino has been good. Good. You made 25%. Not bad. That's a good return. And guys, there is a free Telegram channel pinned at the top of YouTube for everybody right over here. Abdul Rahim, thank you. All the way from Kenya. Thank you so much. We appreciate you guys. Thank you. See how far our reach is now, guys? With you guys liking the YouTube channel, with you guys subscribing, it allows YouTube to push us further and further. We're in London, Ontario, Canada, and our reach is getting all the way to Kenya, helping out traders all the way down there. Thank you. God bless you guys. I appreciate you guys. So hit the like, subscribe to the channel, join this free Telegram channel. You can join us on a daily basis, myself, Dave, and the entire Snipers. Everything we do here, lots of education is provided for you guys. Doesn't cost you anything, just costs a like, costs a subscribe. If you guys want to join the team, you're welcome to join the team. This community is getting bigger and bigger and bigger by the day, getting stronger and stronger and stronger. And our traders are learning more and more and more every single day. So it's going to become like a trading floor in the near future. That's what Dave and I, when we set SST, that was what we envisioned. We want everyone to have a healthy environment to learn and earn together. We win, we lose, we break even together. That's the way how it operates over here. But we do teach proper risk management while we are trading, and everything is done in a live situation to help you guys. It's easier to explain concepts, like how I was explaining that impulse move that I want to take. It happened live. I broke it down to you guys, but I didn't execute on it. So that was my bad in that situation. But I kind of explained what I was looking for. But free blogs, everything is available for you guys here. So that's there. And finally, guys, thank you guys. We hit 91,000. We're 9,000 away from that big goal of 100K. And then we get verified from YouTube that we are a legitimate channel. And, and then just you're verified with them. That means a lot to us. So then they take us serious. You know what I mean? Because it's not easy what we do on a daily basis, but when you have fun together, we learn together, everyone, we all learn something. If you learn something, just because maybe you didn't make any money, you didn't take a trade, you learned something, that's still good in life. Education is more powerful than money. Education is big. Education can lead to more and more money in your near future. But guys, I got to wrap it up. I got to go grab my daughter. Man, I would love to trade the next hour and look for possible pullbacks. Gold is retracing right back up to this area and can continue to push out. US dollar is sinking right now. So there was like a little bounce And gold can continue to be bullish. Look at the daily candle building, that 4-hour candle is building. We could continue to take out this daily point of interest. 4240 is up there. And then we're transacting in the big red upper supply zone. And also indices, US 30 and NASDAQ are continuing to drive, okay? So that's what we had envisioned, guys. You know, when you read the blog right over here, that's exactly what we were talking about. The impact of this 0.25%, what it would do to gold, okay, causing gold to be bullish. We're witnessing that. NASDAQ, causing it, cost of borrowing, risk appetite, valuation impacts, causing more money to go into NASDAQ, tech. We're witnessing that. And finally, within the industrials with Dow Jones, we're witnessing that. So this is why these blogs are important, guys. Chuck Norris approves of these things. We give these blogs out like the day before to help educate you guys as to what is going on, what we're trading in the live sessions. So if you read this earlier on, you maybe would have understood now what's going on the charts and why the market is doing this, right? So guys, I had fun. I'll see you guys in a couple hours, 6:30 p.m. We'll continue this session with our class 3 of our swing trading. Look at the hourly candle, 4-hour candle now. Now 2 more hours to go. It might close above this, and we might continue to target this December high. So we could look for swing trades going into Thursday and Friday for the remainder of the week. Okay, guys? Appreciate everyone. Thank you guys for all your support, likes, subscribes. I had fun. Enjoy the rest of your day if you can't join us later on our swing trading session. If not, we'll see you guys tomorrow morning, 11 a.m. Eastern, and join Dave at 8 a.m. Eastern in the Zoom, okay? And guys, if you got financial juice, there is some remarks here by Fed Powell. Right over here. We think there's a negative 20,000 in payrolls per month. Inflation has come in a touch lower. We think job gains have been overstated by 60,000 in recent months. Evidence is growing that services inflation has come down and goods inflation is entirely due to tariffs. It doesn't feel like a hot economy. Holy shit. Like, this is coming from Powell. Like, he's spitting over here. Donald Trump is not going to like this. This might be the last time we're going to see Papa Powell. He might be canned after this, but he's letting it out. He's not holding back with these remarks over here. I'm going to watch his entire conference later today, and it's going to be grab your popcorn and listen to this. This is good shit. Good entertainment over here. Better than Netflix. Okay, guys, have a good day. Thank you, guys. Have a good day. We'll see you guys and back this afternoon. And shout outs to Dave for the signals provided. He's doing hard work back there too, behind the scenes. And shout outs to all of you guys in the Discord, sharing your charts and, you know, providing your explanations to others and help teaching and things like that. So thank you, guys. Have a good day, everyone. Enjoy your day, and I'll see you guys later on. Thank you, Nigel. Have a good day, Justin. Chef, great day. Patrick, good day, guys. Have a good day, everyone. And everyone on YouTube, we appreciate all of you guys. Enjoy your day as well. Guys, that was a fun FOMC. Trading locations, discipline, find some setups. See how everything closes and how the rest of Thursday and Friday goes. Okay, good. So I hope you guys had some fun, learned something, and we'll see you guys later on our swing trading session. If not, we'll see you guys later. Have a good night, everyone.
Recording stopped.
Hey guys, good morning. Welcome to the live session of Stocks Number Trading. My name is Dave, guys. My partner is Ron. Let's get down to business here, guys.
In on US 30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.